guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey everyone, welcome. Thanks for joining. Good morning, good afternoon. We're gonna get started in a couple minutes. Hope everyone's having a great day, and we'll analyze gold in US 30, and we'll get into it for this post New York.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.
Recording in progress.
Hey everyone, welcome to Stocks Network Trading. Thanks everyone for joining. My name is Ron, my partner is Dave. It is Thursday, March 19, and it is almost 11 a.m. Eastern over here. Hope everyone is having a great day, and we're almost wrapping up this FOMC week, and hopefully everyone is doing well with their trading, they're learning, and they're improving on their mistakes. And we're going to continue today. We're going to be charting gold, top-down analysis, and US 30 together. And we'll see if we can see any moves on this session. I have about 2 hours with you guys, and then I got to go and do something with the kids because it is March break over here in Canada. And just trying to entertain these kids and have fun with them. Yesterday we went and we played some arcades. Today they want to go bowling, and then tomorrow we're going to go to the movies. So got to keep these kids entertained. So hopefully we can get in, we can see some, maybe we get some good volume to trade, maybe make a few pips, and we can dip out of these markets, okay? But we're not going to force anything. We're going to allow the markets to do what they do. It is a post New York session, so we have to consider that as well. So we'll see how things are moving, okay? Hope everyone's having a great day, and let's just get started with some news today. So it was a busy day news-wise, starting from Tokyo session early with Bank of Japan press conference. Then everything moved into London with the UK unemployment rate came in less than expected. That's good. Want to get unemployment rates down across the world. That means more people are working, contributing to the global economy, and doing good for themselves and their family. We had some Swiss news come out as well, high impact folders out of Switzerland. Moving forward, we had a lot of high impact news at 8 a.m. Eastern out of the UK with the British official bank rates. So you can see Canada, US have had their bank rates, UK, and when they all have them at similar times. So you can see all of them have paused. 3.75% in the UK, as did Canada and US. There was a pause, so no rate cuts or hikes across the board here. We had our weekly unemployment claims this morning, came in 10,000 less than expected. That's fantastic for the US. We want to see unemployment claims going down. That's why this number is green. The less individuals we have applying for unemployment benefits, unemployment claims, that then could suggest that they're seeking work and finding work, okay? We don't want unemployment claims to start skyrocketing because that's not good. That could lead to a recession, and that's the last thing we want right now with everything that's going on around the world. The last thing we need is a recession, because that will make matters that much more worse. So let's try and avoid that at all costs. The Eurozone had their main refinancing rate as well. You can see it was a pause at 2.15%. American U.S. home sales were down from their suggested forecast of 722,000, and they missed it by a lot, 587,000. So you can see that individuals in the U.S. are not really participating in buying new homes right now. It could be due to the economy. It could be due to mortgage rates. Has a lot of variables that could contribute to why this number is so low right now. Could be uncertainty too. How do you want to get involved in a new home, get tied up in a mortgage when you could possibly be losing your job in the near future and things like that? So we don't have a stable housing market in North America. I can say that. I live in Canada. I can't speak for you guys in America, but we basically have very similar housing markets. Right now, that's what came out this morning. And if you are going to trade later today in the Tokyo session, Japan has an all-day bank holiday where the Japanese banks are closed. Okay, and earnings. There was some earnings. Big disappointment this morning with Alibaba over here. They're basically like the Chinese Amazon for the Mid East and the other side of the world. Very disappointing numbers came through here. Their EPS, their earnings per share, they were looking at $1.91, came in just over $1, and they missed their revenue. So that was a major surprise, and Alibaba started to drop the markets early this morning at 5:30 a.m. Eastern. So that's not good if the Chinese markets are not sustaining, because that could trickle around the entire world, okay? And there is some after-hours earnings today. FedEx, Planet Labs, Firefly Aerospace, Gemini Space, and a few others to name on here. I don't think these are going to have a dramatic impact on US 30, NASDAQ, or S&P. Those are our Magnificent Seven, like our big names that we're used to. So I don't think we're going to have major moves in the after hours today. Just basic news right over here. Federal Reserve proposes lowering capital requirements for banks. So you guys remember yesterday we had our FOMC session. If any of you guys watched the FOMC meeting with Powell answering questions, maybe some of you guys did, you could dictate the way how his tone, how he was speaking. We got in a gold sell, and it ended up continuing to really sell off near the end of the day, as did US 30 and NASDAQ. The entire markets as a whole sold off yesterday. Oil soars as Iran war enters a new phase. This is not stopping, and it could continue into the weekend and go into next week. So oil is on the radar for a lot of your charts. I would avoid maybe intraday scalping it if you have some unfavorable spreads. Maybe seek trading the futures or swing trading oil at this current time. Stocks sink today. Oil surges as Iran war escalates. So you can see Iran attacks energy sites, defying Trump calls for restraint. So this is going to affect everyone around the world. Like now it's a game of just attacking oil facilities, natural gas facilities across the world, the Gulf states, all over. So this is going to affect you and I at the pumps. You're going to see it this weekend. In the US, I believe it's $3.88 right now a gallon across the nation, and could be over $4 this weekend and going into Monday. $4, that's just for regular unleaded gas. I believe that diesel is at $5.50, almost $6 a gallon in the US right now. And think about that. Like that's the diesel are the trucks that deliver everything to us. So when you go to the grocery store, you're gonna feel it, because everything is gonna increase. I don't see this war ending like tomorrow or this weekend. This could drag on for weeks, months, or years. This is the unfortunate things with war, and you and we pay the price for this. This is how the economy moves, and we have to move with it as a trader. So we have to understand. And same you as if you have a family and you're shopping and things like that, you have to now conserve your cash and not spend like crazy, because you have to really utilize your money wisely these days. So Alibaba's 67% profit plunge shows urgent need to monetize AI. Gas prices soar to highest since March 2022. If you remember that, February of 2022 was when Russia and Ukraine intensified, and that's when oil peaked at those levels. So we may be revisiting 110, 120 a barrel, and hopefully we don't see 130 to 150 a barrel. If you guys remember in the financial crisis in 2008, that's when crude oil hit all-time high of $150 a barrel. And everyone across the world was feeling it. So hopefully we don't revisit those times again, but things are intensifying around the world. And gold, silver, Bitcoin crash as safe haven appeal fades following Fed decision. So you can see gold, silver, Bitcoin have taken a substantial sell, maybe a retracement, not a crash. And then you can see that volume, that money could be moving into oil, it could be moving into more individual sectors, defense securities and things like that if war progresses. Micron had their earnings yesterday, post better than expected Q2 earnings and their Q3 guidance. And just if you want to read your day-to-day news, everything is over here. Okay. And so across the board, we got things going on. We sent out a couple signals today, early this morning, on a sell on NASDAQ around 24,400, and it ended up moving down for 200 pips. And there was a couple signals on gold that never triggered for buys. And then Dave in the live New York, they took a sell and got some pips, continuing with the sell, pushing down. So if we're in oil right now, if you're looking at oil, it's moving above 120 pips, where we were looking to buy oil above 96 and a quarter, 96.28 over here, and it's running 120 pips in profit. Okay, and we can continue just looking over here. Guys, thank you for everyone joining on YouTube. I appreciate all of you guys. There's a free Telegram channel pinned at the top for you guys. It's got our YouTube links. It's got, here's an example of what Dave was doing in the private Zoom with the snipers. Got that big sell on gold this morning. And guys, before and after, and thank you for your comments yesterday on the FOMC session. We had a good session yesterday, and there's 50% off promos and all of that available here in this free Telegram for you guys, okay? And if you like to join the team, we'd love to have you guys. You can visit our website, stocksnipertrading.com. Here's the pop-up link to get 50% off access on any one of our plans over here at SST. And there's lots of education. If you want to teach yourself how to trade, we have tutorials, courses, webinars. I'm going to start to do some like weekly webinars with the team live to answer questions. I want to get back to that, make sure everyone's on the same page, and we can continue to learn together. I can help you guys with any questions that you guys have. If you had a setup, whether it hit profit, you got stopped out, if you need any more clarification, I'm more than happy to help you with that and break it down for you. Maybe to give you my perspective and to help maybe you see another angle, and maybe I can help your process of learning, and I can help that faster, okay? And we have a lot of live sessions here at SST with myself and Dave, and this is us right now doing this one on Thursday. Tomorrow, guys, just heads up, we're going to be coming in early tomorrow at 7 a.m. for a New York session until 10. So it's a 3-hour session available both for you guys on YouTube and Zoom. So I highly recommend you guys join us. We'll have some fun Friday morning. And then there's going to be a psychology mindset webinar uploaded to the website on Friday for you guys on setting realistic expectations in trading. And finally, we do have free blogs available for everybody under our blog section. Okay. So thanks everyone for joining. If you guys can kindly hit the like button on YouTube and subscribe to the channel. We're on our way to 94,000, and hopefully in the next few months, we can get up to 100,000, okay? Guys, I'm going to continue with gold. Top-down analysis. I know all of you guys hopefully have done your analysis prior. Maybe some of you guys have been trading early this morning. You guys have your zones marked up. You guys have your points of interest. I'm going to start fresh, you know, And I'll go over this. If you're learning how to do a top-down analysis, this is the time to learn with me how I do it, and hopefully you guys can start to do this on an ongoing basis. And be patient, be disciplined, allow the volume to come to you, and when it comes to you, you trade with proper risk management. Okay, and that's the only thing we can do as traders. Nothing is guaranteed in trading, but one thing that we can guarantee is we can guarantee that we do a top-down analysis. We can guarantee that we're trading with the proper risk management, and we can guarantee that we're not getting frustrated if a trade is not going our way. Then we start revenge trading and start doing undisciplined actions in trading. So these are things that we can guarantee ourselves. You just have to work on these things and practice these things on a daily basis. And it's not going to be a fix in one day. It's not going to be a fix in 1 week or a month. It takes traders years. It took me years to figure that out, through a lot of heartache, through a lot of financial losses. I was contemplating giving up trading. It came to that point where I just couldn't figure it out. And then I stopped live trading. I stopped trading my own money, and I went back to the learning process. And that's when everything switched for me, because years and years I was just putting in my own money and constantly losing, not knowing what I was doing. So I said, if I'm going to continue this, let me just take 6 months off of putting money in the markets, go back to just looking at the charts and figuring this thing out. So hopefully I can inspire some of you guys to do this, to learn this. It's not easy, but if you put in the time and you put in the effort and you're honest with yourself, you can learn this, okay? It's not that difficult. We don't need to make this any more difficult than it is, okay? And understand that you're going to take losses in trading, and they're lessons, okay? You have to learn from them. Every trade you take has a story, whether it's a win, whether it's a loss, whether it's a break even, whatever it is. Every trade you take has a story. If you jot down that story like a diary in a journal and you write about it, you write your emotions when you took the trade, you will learn a lot about the trading aspect, and you're going to learn a lot about yourself as well. Because trading is 99% is your psychology and your emotions, with you trading the market against yourself, nobody else. Okay, so let's get started here. I'm going to get started on the daily. And you can see today it's continuing off of yesterday's big bearish FOMC, and it's continuing selling off. So are we going to fill this big wick? That's when we hit the all-time high up here, and that was that big drop right down to 4,400. We're not too far away from it. Is it going to build a higher low and we're going to build back up? Maybe Friday is going to be a little bit of a blue day coming back up, and then maybe next week they continue dropping down gold, or is it going to just continue following down? So this is what we're going to start to analyze. And before I do that, guys, I just want to say thank you to everyone joining. Welcome everyone on Zoom. Lady Stone, thank you for joining. Conrad, Sergio, welcome. Nigel. In the UK, diesel is around 2.14 per liter, not a gallon. That's a lot. Wow. Yeah, that's a lot. Yeah, it's a lot, man. I would hate to be a truck driver right now and have a personal business right now, because man, it's hard right now. And welcome everyone on YouTube. Thank you guys for joining. Liz Ming, welcome. Thank you for joining. Diwal Sharif, welcome. Good afternoon. How are you? I'm doing good. Dilawar Sharif from Pakistan, welcome. Thank you for joining. UK, welcome. Kaya, sorry guys if I'm butchering your names. Tony Gold, welcome guys. Thanks everyone for joining, okay? Hope everyone's doing good. Let's now do a top-down analysis together, and let's get into the charts now, okay? And so first thing is, again, identifying critical levels and pivots in the market. The most obvious. Start off with the most obvious, okay? Just start off from the highest and the lowest. That's how I do it, okay? So this one right now that I'm identifying is the all-time high, highest point of gold. It hit. The date was January 29. Easy peasy. We got it. We talked about psychological numbers yesterday, and that's awesome. Adinar, welcome all the way from Albania. I was just in Albania and Kosovo for 2 weeks, so thank you for joining. We are starting an Albanian trading team at SST. I will have all of your online courses in Albanian and English for you guys. And when I come there every few months, I will have an online place where you can come in and we're going to have a trading floor. Welcome to everybody, free of charge for everybody there. It's a way of SST giving back. And this is, guys, I'm starting off with my own home country of Albania and Kosovo, where I'm from, and I'm going to want to give back to the entire world. Hopefully, when I visit you guys, I will have online courses for you guys, and then we can rent out a place with computers and have a trading floor, and you guys are welcome to come in and ask questions, and we want to give back to the world in this type of way, where it's hands-on, face-to-face. So I hope in the near future, inshallah, we can do that for everybody, okay? And that's part of our mission here at SST, to give back to everybody. So put that aside. Let's just continue going here. Sorry, I just read that comment there. And so we have the all-time high, and then this big drop right there. That's what I was just talking about. So let's highlight that wick right there. It's 4,400, psychological number. You can color code the way how you want to do it, right? Orange is all-time high for me. Any yellow lines are daily points of interest. And when I dissect today's daily candle, the high and low is purple, and I'll find some daily points of interest. Then I move into the hourly, then back down to the 5 minutes, okay? So now some zones. So easy way to figure out a zone is go from your all-time high as a point of interest and go to the nearest bodies where the volume was trading. You can go up to those bodies or you can go down to those bodies. That's all personal preference, right? I'm going to make it to those bodies and stretch it into the future. And you see, guys, how that was the one all-time high top. Down here is kind of the neckline where we're trading at today, right here, where these bodies are. I'll put a point of interest right there. But you can see where it came down and then it came back up. There's your traditional double top. It didn't come all the way to equal highs. It didn't make a new all-time high. They lowered it right there, and there's your M drop. So we are approaching the neckline where a lot of things can happen down here. Gold can continue to break down and maybe just break here and then get a wick and come right back up. And then next week, gold is coming right back up. It could continue to follow this M pattern here and continue and actually close black below here. If that's the situation, then this point of interest could be resistance while the dip buyers are buying it up. Now the offers are here, and then gold starts selling off next week. Or it could just start to be a bottom right now, where naturally this leg came down. One leg came down, came back up, and now it's coming down. That could be the W second bottom where it's developing to come back up. But we have a lot of selling volume behind us from taking from FOMC yesterday. So if we're buying, we are counter buying, right? And we're trading against this current trend. But if you're accumulating, yes, you are accumulating on an uptrend, and gold could come back up. But everything that's going on around the world, you have to now consider what's going on with this war. Maybe a lot of gold, safe haven gold and silver has been selling from the all-time highs, and then those profits could be moving into oil, which is in more demand because supply of oil is starting to diminish because that Strait of Hormuz has 20 to 30% of the global supply of oil, and it's being currently shut down as we're speaking. And you have now bombings of oil refineries in the Gulf states all over now, and natural gas. So when you're bombing those facilities, that's also going to take production away. So supply is going down for oil and demand will be increasing. So that's where you can think about how the money is moving. Also in the stock market, you see stock market selling from all-time highs. That could be moving into oil and things like that right now. So it's a funny way how the markets move, but you got to understand it's a wave of liquidity. It's a wave flow of money. It moves from one sector to the next sector, to the next sector, to the next sector. And if you can follow that money, then you're doing fantastic as a trader or investor. Okay, so now that we found the big red supply zone, let's complement it with a green zone. So like right here at this most recent low wick, what I can do is I can see a zone below it. Okay, how do I see that? I use my yellow line as like a reference point. There's those bodies right from there. So it was red when it came in there, previous all-time high, drop. We stretch that into the future. I can see when it came in again. And there's where it closed above. and started to move. So now I can kind of adjust it. The way how I can adjust it, manipulate it, is because I can already see the bodies where they closed previous. So a lot of analysis is also, you got to look in the past to predict what will happen in the future. So you see that zone now below me. So I can see on that day, it came and it hit that zone back up. And today we came down, we didn't reach that zone. So far it's producing a higher low wick, but it could definitely come back down because we still have 5 hours and 40 minutes to go. So let's now just follow off of this wick. And then you see it closed, an ignited body the next day, and then the pullback was exactly right here. So when you have 2, 3, 4, 5 data points, exactly, that's what a point of interest is. So let's identify it with a yellow line. Then once I identify point of interest, body close, body open, retest, I look at the number. If the number correlates with a nice psychological number, I can put a check mark on my point of interest and a check mark with my point with my psychological number. And that helps me understand that that's a good higher time frame zone to put a line, put an alert, and watch the lower time frames, how they react there. I could be looking to buy or sell off of that point, off of that line. And that line correlates with a nice psychological number, 46.50. And that's a nice psychological level. Right now, our daily volume is below it right now, okay? So it is resistance currently. And I can continue to do this just for education purposes. Here's another one up here. I don't think we're going to come all the way up there right now, but you can see how the volume closed below. We pushed down, consolidated. There was FOMC, and today is a continuation. But right here, there was a wick. That's a data point. Rejection, wick, wick, body close, body open. There's your resistance. There's where the volume closes above. Now it acts as support. So this is where you can look to buy off of. And then you see how these big daily candles, look at where they're closing and opening right at this yellow line. And it's right around 5,100, right around there, that psychological number, okay? So now let's start to move with FOMC's volume, most recent volume. So yesterday, you see, it was a very bearish day. It closed near the low. First thing I like to do with that is cut that bar in half. Cut it in half, because that's a very important candle. This was all of FOMC's volume yesterday. So cutting it in half, if gold ever does come back up, it might come right into half of that and continue going back down. We're not there yet, so just identify it, right? Another key critical area is where FOMC closed yesterday and where we opened. That's a point of interest of a closing and opening body. That's where market makers close and open. So I mark it on my chart. So now I know my opening balance today was 4,818. It was initially bullish when it opened. So there was some early buyers today that bought the candle. It went blue, 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 but you see it's below 50%. We made a high of the day. So this is where I place my purple line representing the high of the day. And I can see it's 48.70 and it's lower than 50% of FOMC. It's lower than the opening, a lower high, lower high, lower high, lower high, lower high, suggesting we are still trending down. And now the sellers continued to bring it down to the opening balance. Now look at the size of the wick. Remember, if this was a 1 minute or 5 minute candle, this is the setup I love to sell for a scalp. So even on a daily bar, when I tell you all candlesticks have the same characteristics, that's a low wick. It already came up. They already extinguished that blue volume. And now you have that firecracker analogy that I talk about, where if you light a firecracker with a short wick, it will blow up in your hand. If it's got a long wick and you light it, it takes longer to extinguish before it will blow up. So utilize that as a wick analysis analogy. You guys got that? Because I learned that at a very young age, nothing to do with trading. When I was lighting firecrackers when I was a kid, that's how I learned how wicks work on firecrackers, okay? And then when I started to see how a candle has wicks, I put 2 and 2 together, and it makes a lot of sense to me now when I'm scalping or trading the markets, how I understand wicks. Does that make sense to you guys? Let me know. Like, that's, I'm telling you the honest to God truth, the way how I learned price action. It was, I look at a bar, I look at a candlestick like a firecracker, right? So there it is. It's got, once it fills that, it explodes and it's going to go down to the next, the next fill of that candle. So you can see how we came down, came down, came down. We filled this wick right here on Friday, February 6th, and it actually produced another. But this is a long wick. So this goes exactly with my firecracker approach. See, to fill this wick, You got to have a lot of volume. It's not one of these short little wicks. So they tried today. It came down, it came down. That's the lowest point it came down to. That's a shit ton of selling volume. But you see, to fill this wick, it needed to make a major move, right? So the buyers came in and look at the number. Look at the number, guys. Look at where the wick, the lowest point is. It's 4,500 on the dot. Okay, how many times for the past 6 years have Dave and I been telling you guys psychological numbers? Ask yourself, is it just by chance that wick stopped at 4,500? No, it's not by chance. We see this on every single day on all securities. Psychology and psychological numbers play into an auction theory. This is what we're trading. It's an auction theory. If you ever go to an auction, this is a gold auction right now, a live gold auction. So, but these are not like people just placing, these are institutional orders placed at these psychological areas looking to get filled due to efficiency of the markets. And look at it. It came right down there. Had you been sitting with a pending order to get filled at 4,500, you would have been filled, and it's up to 4,600. That's a $100 move on gold. That's 1,000 pips. You're done. You don't even need any more, right? That could be a weekly goal for somebody. However, for us that are just intraday trading, we got to acknowledge that. So what I see is they built a support here, higher low from this wick, and we're still above the green zone. So there is buyers still in the market, okay? The sellers have not broke this complete zone down. Now we're coming up. So what I like to do now is just with the current volume from the open to where there is, I like to cut this black candle in half. Okay, just so I know where the current half volume is, psychology of the volume. So right there, I get my Fibonacci. I already have it set up to find the point of control. There's the 0.5. So of the current volume right now, okay, so it's 47 and 11. So I just know that if it comes back up bullish, like if we continue pushing up this black candle, we have resistance right there at that yellow line. But if it goes up further, it might, that's it. That's where the wall could be, right there, around 4710, 4700. Then those sellers who originally sold today's daily candle may have pending offers there and continue to push it down. However, if the buyers are strong and they break it above there, then on lower time frames, it could retest this as support and to take us back up to the opening balance, right? I take it from line to line, and these are big moves. Like you can measure from 46.50 to 47.10. That's $60 in gold. That's 600 pips just to fill from this yellow line to that yellow line, okay? Now, what I like to do is I look overall at the overall trend. Obviously, it's bearish. We're coming down to a possible M pattern. We got some buyers today buying right now the bottom. Will it come back up or is it going to come back down? And this is a good level to watch for the close of today and tomorrow going into the weekend. Are we going to break this demand zone and gold going to continue selling next week? Or are we going to find a bottom here, consolidate, and like this, trade in here and then bounce back up next week, okay? So what I do now is I break this daily candle. If you guys are still following with me, I have some daily points of interest now. Now I break it down. You can go down to the 4 hour if you like. That's fine. Break down the 4 hour candles. I like to go into the hourly candles, okay? And then I can see the hourly downtrend when it started. It started Wednesday at 6 a.m., 7 a.m., continue, consolidation, right? Little counter buy, came back down, cut bars in half, continue pushing down. Yes, there was an elevator, stairs coming back up to, to resistance, lower highs. Then we move into the big drop Thursday last night, 2 a.m., there's 3 a.m., continuing to push down all the way down. Now I can see the drop of the day was 9 a.m. We came back up. Look at where it closed. Kind of closed right at the point of control of this bearish candle. Next hour, it opened up. That's where we're getting our resistance, 46.50. So you can see on the hourly how we're getting those wicks. And then it came back down. Did it close below those bodies or make a new lower low? No. So we are consolidating. Now you can see a few bodies. This is the consolidation of the hourly right there. Okay. You can make it neutral if you like, okay? So you see we're in a flag right now. There was a little impulse break right there. Previous hour at 10 a.m., got rejected, came back in, closed inside. This hour we just started was bullish, 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 but notice how it did not break above that hourly wick. So it didn't do its job. The hourly buyers failed. It came up there, and that's a lower high, and they're pushing it right back down. But when they pushed it down, we're not filling that wick to close below. If we close below here, yes, we can continue dropping down. But right now, we're still trading inside here. But it is still bearish. Lower high, lower high. Maybe we got to wait for some hourly volume to close above, I would say 46.20, and maybe to continue to move up. But right now, it's still inside here. So we're still in this bearish flag now. I can continue to highlight some critical hourly areas, but I need to start moving above here. Then I can come back and start dissecting all of this, okay? And then what I like to do is, since I found this consolidated box, I like to go backwards now. Just see if it correlates with anything in the past. Okay, let's go backwards. Let's go backwards. Let's go backwards. See right there how it came right in there? I can see the exact date now and time. Right there was a big black candle. It came in that zone. Sunday, February 1st. Futures market open, 8 p.m. It came, remember, Sunday night was a big sell, came right in there, back up, and then we came right back down in there. There's the body that closed below the zone. There's the retest of it right there. Came all the way down, and then we came back in the zone. So it's like a V recovery. And then see when it came back down into that zone, it held and then pushed back up. So we are trading exactly right back into that zone, okay? If I go like this and show, and look, you can even go back and further back test. Look at how much that volume was trading in that zone. So this is, we're trading in a dead zone right now. So we have to let the buyers and sellers continue to accumulate so that we can either continue to move up or down. You see, we're right in that exact zone. So we can either trade inside the zone, or we wait patiently for some hourly volume to continue to close up here, maybe retest this, fill those wicks and drive up to there, or we wait for selling volume to close below there, retest this, and then continue to do its job, filling that wick and maybe fill that wick. And then I know that that's the lowest point of the day, the purple line. Or we're just going to continue to trade in the box. It might just go down in here, come back up in here, go back down in here. Those are the three options right now, okay? So what I like to do is, if I don't want to sit and wait for this hourly candle to close, I go to the lower time frames. I go either to the 15-minute or 5-minute. When we run into the 5-minute, here we go. So here are the 5 minutes, the big drop today. There was when we hit the lowest point of the day right there, 9 a.m. We came back up, kind of produced a little bit of a double bottom. So what I like to do now is the same type of analysis on the 5 minutes. There's bodies right there. Okay, body, body. Then I see it's a wick, a wick, a wick, a wick. Do we see any black volume on the 5 minutes closing below that red line? No. So it built. There's the resistance. It came back down. It's like basically a double bottom. One bottom. There's your neckline. Kind of that second bottom that didn't come all the way down, but you see higher low. Then we broke out. You could have took that scalp on the upside and maybe hit a few pips coming up, and then it came back down. And you see, it's still now struggling at the 5 minutes at this daily point of interest right there, right there. So I can now draw like a red box right there on the 5 minutes to show where the 5 minutes are struggling. The buyers are struggling to continue to break. There's an impulse, impulse, impulse below 46.50 coming all the way back down. But you see higher low. They didn't push it all the way down, came back up, and then impulse again, lower high, and now we're dropping with this leg down. So we're still, this is that hourly box we're in, the consolidated box. So what I can do now is I can either wait to see, are these 5 minute sellers going to close below here, maybe, and then push it back down to here, maybe the low of the day, or is it going to hold here? Then we're going to come back up with buys. Ultimately, to continue with higher time frame buying, we got to see 5 minute volume, see a wick, a wick, a wick, a wick, and a wick, and a wick. So we haven't closed with blue volume above 46.30 all day today. So if we get that close above there, maybe we can come back down. This will be a green zone, and then we're breaking out bullish up there. And we have a lot of room we can fill up there. But right now, that selling pressure is still pushing down, okay? So what I like to do now, after I've done my analysis, not always, but for you guys, I like to add indicators. So popular indicator that most traders use is a 9 EMA, this green line. You see we were below the 9 EMA, below the 9 EMA, below the 9 EMA. There we just closed above it briefly, came back down, higher low, we got back above it, it pushed, there we closed below it. So when we're above the 90 EMA, it's considered to be short-term bullish. When we're below the 90 EMA, short-term bullish. Right now, we're currently, the volume is still below the 9 EMA, pushing down. 200 EMA is a much higher time frame, shows the last 200 bars. It's this purple line above us. You can see we're nowhere near that, but it might be coming down to our daily point of interest. It might even be coming down to this 46.50. Then if we're coming back up, that 200 EMA might be there like a wall to continue to push down. If maybe we come back up there and we close above the 200 EMA and we got a 9 crossing over, then we can consider to be bullish to continue to buy gold. Okay, and then the final indicator I use is the SST daily bar. We can set this on any higher time frame, the daily, the 4-hour, hourly, to just give us a little picture so we don't have to continue to flip-flop different time frames. Right now I have it set up this week on the 15 minutes. We've been using that and I feel like we've been doing good with it. Normally I have it on the daily bar. If you want to utilize this, you just go to settings right here, go to your inputs right here, and you can put it on the daily. So if I put it on the daily right now, it's going to show me the entire day trading. So this can give me that higher bird's eye perspective. There was the opening price. Remember, we looked at it at 6 p.m. when it opened. It was briefly bullish when it opened, got rejected. There's the big daily selling volume. That's exactly where we just hit the lowest point of the day. And this uptrend that we're having is producing the wick on the daily candle right now. And it's still very bullish. So you can see if we're buying, we need to have confirmations of bullish volume closing above here so that we can continue to push up against this big black candle, because this thing could just continue to offer and just continue pushing down its wick and coming down. So if we are buying, we're counter trading, right? If we're selling with the overall trend of the market. Okay, so I'm going to just keep it on the 15-minute like we've been having it all week. It helps with when we're trading the 5 minutes, we can see the 15-minute the 15-minute higher time frame, and we can follow it every 15 minutes when it's opening up a new 15-minute candle. Okay, so there's the 15. Okay, so I can see that this 15-minute candle that just opened up 6 minutes ago is a bearish ignited candle right there. Just opened up at 11:30. It's pushing down and it's got a wick forming right here. Okay, so first thing what I like to do is, that's a big body candle. It closed below these bodies, so that's a structural candle. First thing I like to do is cut it in half or find the point of control of that candle. How do I do it? Opening balance, closing balance. When a candle opens and closes, you can verify, and then you can start to do some analysis because it's still not moving on impulse. It's physically closed. There's the halfway point, 45.90. I can find the point of control of that bearish candle right there. So you can still see, if I'm looking to buy, I have to invert this zone. I have to at least see buyers, I don't want to just see blue candle come in there and then go back down, because then I'm in drawdown. I'd like to see a blue candle physically break this, close above, invert this zone where I make it green, and then catch some more buyers pending there, and then maybe we can push up to there, right? So it's still bearish. And then now on the bear side, one thing that I like to see is the sellers are very strong today, but can they continue to close it below right here? This last push down at 940, it came down, closed, came down, closed, came down, and then we started that bullish move up. So right now, can these sellers close below here to continue to drop it down, or the buyer's going to be protecting this so that we come back up? Okay, and you can see that we do have like a little M top on the 5 minutes. It came up one top. This is the neckline right here. It came up, there's your second top, and there's the candle that closed below the neckline. So traditionally, we should see it push down further to here. We'll see if there's support there, maybe down to there might be support, or they're gonna push it all the way down to the lowest point of the day. But it could also build like here, a higher low, come back up, neckline, come back down, double bottom, and then we break out of there. We could buy up to this zone. I'm not saying we're gonna buy and we're gonna go till all-time high. Remember, I trade from one zone to the next zone, from one line to the next line. And I measure the moves. So I know. So if I'm looking for a buy above here, if I get it, just to take it up to that red zone, that's $25 move on gold. That's 250 pips. You better believe I will be taking my stop loss, going to a break even, taking out 80%, leaving 20% running, because the market is telling me every time it comes in that red box, it goes down. It comes in that red box, it goes down. It might come again in that red box, and if I don't do something with 250 pips, it could literally go right back down. Okay, hopefully that's not the case, and it's got enough now volume to break through. That's 400, 500 pips up there. Like, that is a big, massive move. Sometimes when I'm scalping, I'm looking just to scalp one candle for 20, 30, 50 pips. Now, when you're getting 250, 300 pip moves, this is now we're talking some serious pips, okay? But we also have to, if we're risking that much, we have to minimum have like a 1-to-1 risk to reward or 1-to-2. So we got to be risking more than 100 pips for that reward. So this is where you have to utilize your lot management, your risk management. What size will you be using? Because if it goes into drawdown a little bit, 50 or 100 pips, that's just basically how the volume is moving. Like, let's just look at this candle, the range of this candle. This is not a very special candle. It's just a spin top. Doesn't have this much volume like that previous one. The range of this candle from top to bottom is $14. That's 140 pip spin top indecision candle. So there is massive volume right now in gold. Okay. So now, do I just buy or sell right now? I know I get that question. Everyone says, Ron, do we just buy or sell? Sometimes we got to just watch what happens. Maybe I got to see what will happen. Will they come down here, spike this, and come back up blue? Right now, I'm looking at these candles. The buyers have not produced another higher high, but I see now a higher low. So I see something. I see a little consolidated zone, like right here. Maybe I see some consolidation right here. Okay, so now we're moving up with a hammer. So do we just buy this hammer right now? We can, but how many times could you just have bought where that candle was blue, then it went back down? You could have bought that candle that was blue, then you went back down, and they major flushed you out. So we could buy this candle right now, but then they could flush us down. So why don't we wait and see some closures of volume? Volume confirms moves. If you're, speculating, or you're going in as a position and you're going to add more, start up very small with a position. Whether you're buying or selling, start small. And if everything starts leading up to your analysis and confirming, then you can slowly start adding more positions. But don't just go all in because you're excited and you see a blue candle on a black day, because that's exactly what the market wants you to do. Buy those counter trades, and then they're going to continue offering and pushing you down, right? Look at that. That candle was blue, it was a hammer, and now it's back down black. So just those people that bought that candle are in drawdown, right? I know that maybe it's not enough for them to panic, but still, when we're just talking and learning about trading, you just get excited on a blue candle, and now look at it. Now it's down 80 pips. Most traders over leverage and they're panicking now with 80 pips. And that's exactly what the sellers want. Now they're coming down to take out that low and drop it down even further. So those buyers bought in. Those buyers bought in with no closure of volume. And you see now how they're taking those buyers for a ride. That's trading in a nutshell. Do you trade on impulse, or do you wait for candles to close? Every single trading mentor, every trading YouTube channel, I guarantee you the things that they say why they're successful is because they're patient and disciplined, right? I don't watch a lot of YouTube channels myself, but if you go on most YouTube channels, they're going to tell you word for word, the reason why I'm successful in trading is because patience and discipline. And then when you listen to 99% of traders who constantly lose in the markets, word for word, they're probably saying, I'm trading on impulse and not waiting patiently for confirmations. That's it, okay? There's no secret to trading. It's just trading rewards patient traders. That's it. Why don't we all become patient traders, right? Look at the candle now, how it came down, and now it's coming back up. Where will it close? It's still in this consolidated flag. It's building some buyers, but still could push down. Right? So in situations like this, when it's like this, sometimes I look at another security, right? So I'll just stay with this for a couple more minutes, and then we'll do US 30. See, now it's coming back to the opening balance. Now it's a spin top candle. So spin top candles are not necessarily the best to trade, but they give us clues that the market is pausing and could potentially reverse back up. However, it could just pause and continue pushing down. Okay. So now I look at those most recent lows. They're pretty equal lows. Okay. You see how we don't have a new lower low. Now we got equal lows. But what I need to see is like a new higher high to build, because once a new higher high is built, then more pending buyers can start to step in the market down here because they see a new higher high is being printed. When they see a lower high is being printed, then more offers, more sellers could come into the market to continue to push this lag down, right? But we do have something here, which is called equal lows or tweezer bottom lows. So what that's telling me is the sellers don't have momentum to continue pushing down. It's kind of stopped right there, right? So that's just one indication that the buying is holding, okay? But that doesn't mean we just buy. It's just letting us know a clue that there's equal lows. Now the sellers are continuing to push down. Look at where they closed it, ignited. So right now this candle should technically break this red line. Okay, it should. Why? Because the wick is so small and the candle opened right here near the bottom. So technically it should break this and create a new lower low and continue dropping down. If the buyers can hold this, then it's telling me that there is good support there, still holding. Okay, so let's see how is this small doji candle. This is a new 15-minute candle as well. Okay, so it's 11:45. So they broke it down again. So those equal lows, they held for just 2 bars and that's it. And now they were invalidated because now the sellers are continuing to push it down with a new low. Okay. So what I'm watching is this structural area there. Now it broke that low and coming right back up. Okay. So can the buyers continue to accumulate in this zone, or are these sellers going to continue to push it down? Okay. And then the volume is kind of thinning out a little bit, considerable since this big black candle, this big black candle. See, the volume now is kind of fading away. So if the sellers cannot continue pushing it down, then maybe buyers will step in because they see maybe the selling momentum has faded off. Then the buying leg might come back in. Okay. Is this helping, guys? I know I have not entered in a trade. I understand. I know most of you guys come on YouTube and say, is he buying? Is he selling? Is he buying? Is he selling? Right? Sometimes you got to be, what did we just say? You got to be patient in trading. You got to be patient. You got to allow things to develop, right? I could have bought, right? But I'd be in drawdown right now. Okay. And maybe if I sell right now, I might be selling at the lowest point where the buyers are now building up, and then I might encounter drawdown. So I have no problem waiting, right? It took me years and years to learn this. So now just because I'm live on YouTube now, I don't want to just throw everything I learned over the years just to impress some people on YouTube that I'm getting in a buy or sell. It's not the point of what we're doing here. The point of learning to trade is learning patience. Look for clues what these candlesticks are doing, right? If we want to go to a higher time frame, the 15-minute had 2 massive 15 minutes. Now look at how like it's kind of pausing here. And this is where the 15-minute candles were barcoding earlier today. That's where it came down, it came back up, it came right to 50%, and we had that big major move. Now we're coming back down right into this location where those 15-minute buyers were accumulating that move. This could be the second bottom on the 15 minutes, but we're watching it on the 5s. What I mean by that is there's the one bottom, and here's the major neckline. It's a double top right there, the big red box. Now we're coming back in. Is it going to come right in here, right? Somewhere in here, maybe right there. And then the 15-minute buyers are going to step in, producing that higher low to bring it back up to this zone and maybe to our bigger one, right? That's what we got to watch for, okay? It's not just about just buying and selling anywhere. You got to physically know where you are. Now look at the blue candle coming in. But what I like to see is I see a lower high and a lower high. I'd like to see this blue candle just fill that wick and create a new high, because that could change up everything then. Then new buyers could start pending in here, okay? If I just buy this candle again as blue, it could come right back down and do the same thing that this candle and this candle did, right? So I'm just waiting now for the next 1 minute and 10 seconds to see, will it close above this body or will it produce a new high? Okay, now I see a bullish engulfing candle coming in on the new 15-minute candle. Okay, so this is now we're seeing good support coming in. Now we're seeing a little bit of a bottom being built, but still it could just build and come right back down for that second bottom, right? To grab more buyers. Okay, but let's see. Now it produced a new high. Okay, this candle is going to close. It filled not one, but 2 wicks. Perfect. Okay, so this could be one of those candles that we could cut in half and build off of this thing. Okay, if we're looking for buys, because it could just come right up to this red zone. There's your 9 EMA and come right back down. Then we look for that second bottom. Okay, so we see support being built, higher low than this red line. It came in right now at the 15-minute at 11:45 with this new 15-minute candle. Okay, so we're getting higher time frame support right now. Here's the close in 10 seconds. Let's figure out where it will close, right? Okay, and look at the size of the wick because it could continue momentum going into the next candle without even pulling back. Okay, there's the wick. It opened blue. Is it ignited? Can I cut that candle now, that blue one, in half? I can because it engulfed 2 candles, so that's important. If it pulls back, I could be looking to buy a pullback right there. Right now, it's still holding, okay? So it's still holding this doji candle, which could build right up to that red box and come right back down, okay? So do we take the buy now or should we wait for that pullback to come back down and pick up maybe more buyers, okay? It's always advisable to wait to pull back, right? Because sometimes if we take that buy, it goes up and it will come down and we're in drawdown. But sometimes it really opens ignited and starts going, okay? So this is the hardest part of trading now, in my opinion, is do we buy this candle or do we wait for the pullback? And sometimes when we wait for the pullback, we're gonna miss that bullish move going through, okay? And what helps me sleep at night is if I miss that bullish move, it doesn't matter, because the market could always rotate back down and then I could get a better entry, right? So you have to make up your mind early. You got to justify the size of the wick, the way how it opened and it's going, okay? If we took that buy right there, we could be up now like 50 pips right up to that red box right there. You know, that's sometimes where you're just trading one candle and one candle alone. You could now be at a break even, or you could be taking out 80%, or we're still waiting. Now we can see what type of offers are in that point of control of that big black candle. Okay. Now at least I'm seeing more structure being built, right? I see it come down. There's one bottom. Now we're trading in that neckline. So it definitely could come back down. Could be a double bottom or just continue selling. It could come right into right there, that red line, build, and then continue to break out of here. We're looking for blue volume to close above so we can invert this zone so that we can make our way up to the next zone, right? So we got a lot of this bullish volume on our 11:45 15-minute candle, okay? You're still, if we were buying, we're still counter trading, right? Okay, so maybe we got to see it maybe build one more time, okay? See here, this is where majority of that selling pressure was at push down. It came right in this zone again, pushed down. Here it closed above. That's when it kind of retested this, pushed up. Then we closed below it. It came back up. So there we go. There was that big blue candle, came right into that zone. That's why I said, guys, you know, that was a 50 pip move right there, right into that zone. And then now they're pushing it down. Okay, so it's reloading itself. And we've got 2 more minutes to go into the close. So this is where it's struggling to break right now. Can it come all the way down? Yes, I'm waiting for a buy down here. Okay, I'm waiting for that buy down here. Will I get it? Maybe, or maybe I might miss it. Okay, but if we're waiting for pullbacks, I want a solid entry with, I'm not the only one waiting for a pullback. Believe me, there's the entire market. Pending orders are waiting to get filled back down in here. If the market wants to come down here, it will come down here to pick up these orders. However, it might break through here and make this the new zone, okay? So you see when it came back down, it didn't kind of break its opening balance. It continued to fill itself. So it's refueling itself. It's coming in here. So let's see now, will it close above this red zone? Okay, if it closes above the red zone, I'm going to flip it green, right? Because now we've inverted that zone momentarily. We have 60 more seconds to go. Good 15-minute candle. Like, look at the range of the 15-minute candle from the lowest point to where it is now. That's a $30 move in gold. That's 300 pips just in these two blue candles, and 300 pips, and we're still counter trading. It's unbelievable the volume on gold right now. Okay, I'm just going to check my spreads. Half pip spread. That's a great spread to be trading right now. Awesome. Cafe, you explained things really well. It was your first time joining our live stream yesterday, and after listening once, I feel like I've learned a lot. Amazing. Good. Good. Just continue learning, right? Trading is not easy, but once learned, you can make it easier, right? But trading is one of the most difficult things you can learn in life, because there's no guaranteed paycheck. You can put in all the hours to learn, and you might not make any money in the markets. Okay, it's not like when you go to work, you work a 8-hour day, you get paid for that 8-hour day. You can analyze the markets for 8 hours, trade the markets for 8 hours, and you might not get paid. You might not make any money, right? You might lose money. That's why it's the most difficult thing to learn. But while you're learning, learn patience and discipline. Believe me, that will save you a lot of time and money, okay? And if you miss, like I feel like I missed out on a buy, okay? Now, psychology tells me I have to buy now, right? That's that FOMO, fear of missing out. But why is my brain telling me I have to buy up here? Why can't my brain tell me continue to wait to buy down here, right? I have to literally tell myself that every single day when I'm trading is, yes, I want to buy up here because I might miss out on that move. But still, why can't I just wait patiently to buy right here? Because I know that there's other pending buyers waiting there. Otherwise, I just got to go with how the market is moving. You have to make up your mind. And if I'm buying this, I got to go with the right risk management, okay? Understanding that it could pull back on me. If I'm missing out on it, I'm still waiting here. So what I do with this red line is I'm going to place an alert here. I'm going to add an alert. Gold will eventually come down here at some point. Maybe the next candle, maybe 30 minutes from now, maybe an hour from now, maybe Tokyo session, maybe tomorrow. I don't know. But when it comes back down here, the longer that this gold moves away from here, the more pending orders are building at this location. So if it ever comes down there, I could be buying with that smart money and then go directly right into profit, coming right back up. I feel now I've missed out on this move. I don't want to buy the highest point, especially when this thing is moving 500 pips right now. I'm way behind on this. Okay, so now I got to watch what will happen at this red box. It might come right into this red box and I might be selling this volume down, right? Because I know that there's still a red box up here. So that blue volume could technically come into here and then go back down to trade down to this box. And once it gets here, that's where it could build back up to break from this box, right? Okay, so the reason why I did not convert this red to green box yet is because that candle came up and closed right there. If this volume closes above the red box, I will make it green. But right now, it's still, this is an impulse candle breaking out, okay? Okay, so it came up there into all of this resistance. There are some sellers pushing it down. Where will this body close now? Okay, that's a big rejection. So, sometimes when you're counter trading and you make a nice move like that, it's good to now reduce your risk. If you bought this candle or this candle or that candle, you should be minimum at your stop loss should be at break even. So you don't risk losing any money. When you're counter trading, you should have some counter trading rules, understanding that this might not go up forever and be a complete reversal. It's a nice move. So you should be scaling out some profit, right? Everyone has their own rules. My rule is I take out 80% and I leave 20% running. And in that way, It allows me to continue to compound my account, put some money in my account, leave a runner, and look for another trade, right? And be on my way to my daily goal, and then be done trading. Because sometimes when you get greedy in the markets, greed will take over. You want more, you want more, you want more. Like just like this was nice buying, they want more and more, and then it came down. Just like this was a nice buy, they want more, 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 it came back down. So just like this was a very nice buy, you want more, and then it came back down, right? We're not in a trending market yet. We're still just building. We're in a building phase. See how it came up, back down, it came up, back down, it came back up, it could be coming back down. So we're just still in a flag, right? There's still no trend yet. Okay, so if you're buying or selling, this is maybe where you pip and dip. Okay, so this candle now is closing in 20 seconds. Remember what I said about the zone? If the blue volume closes above, I will make it green. If it closes back inside here, it's still a red zone. Then I know that that's an impulse candle. Look at the size of that wick, right? That's not a short wick. So if we get another blue candle, think about how much it needs to continue to fill, and then create a new high, okay? So, but it did close above that red zone right now, okay? So we've closed above, so I'm making it green. Okay, notice how this candle opened. Bearish, ignited. Okay, so it's dropping down right now, ignited. Let's see if it can get now a wick in the box. And if it flips, it could turn up blue to come up here, but this is a rather big wick. So it could just come up blue and then go back down, okay? If it was a shorter wick, that's where you get that pop and then it continues to drive, right? There's a lot of exhaustion behind here. Oops. Okay, so I'm still waiting below here for maybe a pullback. It's not there yet. It's retested this zone and it's blue filling up. But will it fill that complete entire candle wick and continue for a new high? Or will it just go up halfway and come back down to retest this zone and pick up more pending orders in order to continue to build and fill that wick above? Okay. And we're trading right at 4,600. That psychological number at 4,600. US 30. I was going to do US 30. I can get to it in a moment. It's noon. We have a new hourly candle right now. Okay, so let's see if we got hourly momentum to continue to move to the upside. Big bullish candle filling. Wow. Okay, so can it fill that entire wick and create a new high? Remember, when we come into a red zone, that could be a potential selling area. Okay, so if I'm not in a buy, I can maybe consider taking a sell up here. I could sell this leg back down. And Trump is talking right now. Sorry, guys, I didn't see these remarks. Trump will be speaking regarding Japan's support on Iran. Believes Japan is increasing efforts. We're not putting troops anywhere. Iran excursion will be over soon. He's calling it an excursion. That's funny. Calling war an excursion. Believed impact of Iran would be worse. Will end soon. Okay, so Trump is saying it will end soon. I don't know about that. Okay, so that candle did, in fact. So you can see that the buying pressure is still strong, right? It filled that wick and continued to come up. So let's see now where the selling zone is. Here, it was right here, this red zone. That's where it impulsively came up, those big wicks, and then it dropped down. It came in here again, dropped down. It came in here again, and then dropped down. So now it's coming right back in here, okay? So each one of these levels is a buying level, okay? This is the best one, where it all started right there. This is another if we get a pullback here. However, if we get now this bullish volume breaking through here and closing, okay, let's say it comes up to that daily point of interest, then it comes back down. We could look to buy this box, but this one is then would be a nice zone to buy, okay? Each one of these blocks gets stronger, gains strength as the volume moves away from it, okay? This is number one. If we can get that fill back down in there, that's what I was looking for, but we never got that pullback. This was just the first pullback that continued right off of there. So now I'm waiting to come back down into here, but I'd like to see what type of reaction we get in this red zone. This is where I could be looking to sell it back down, right? But this could be very strong volume breaking through here. Trump is speaking now. I missed out on a buy. I admit it. I missed out. I could have bought that retest candle, but that wick prevented me from buying it. And those are those would have, should have, could have moments, right? That's a 200 pip candle. Like just when it retested and started right there, I measure these things. That's 220 pips. That's unbelievable. Just on a 5-minute candle. Okay, now it's closing in 30 seconds. Let's see if it approaches this zone here. This is what I mean. Sometimes when you're a scalper, if you nail one candle when it's trading like this, when we're talking about 100 to 200 pips as a daily goal, you can see that one candle today, right now, is like 100 to 200 pips. You just got to be on the right end of a candle. Okay, but I don't want to continue just buying the highs because it could just come right back down, right? So I'm waiting patiently to buy back here, to buy back here. If it comes down, I don't know if it will come down. Okay, so we got to cut this candle in half, right? Because it could pull back just to a halfway point and continue moving up. Everyone is very quiet today. Why are we so quiet today? Are we upset that we missed a move here? Well, you can get upset. But I know if I get upset, it just causes me to do some silly trading. So I don't get upset. I wait for the market to come back down. I'm telling you guys, this is the hardest part of trading. Remember what we say, patience to buy pullbacks? Okay, the only pullback was this candle, but that big wick prevented me from buying it. I told you, if it was a short wick, 100% I would have bought this. But that wick, sometimes I do buy that, comes up right there, and then comes back down, and I'm in drawdown. And then I say to myself, when I'm journaling, I say to myself, why the hell did I buy that candle when I knew it had a long wick? Okay, there's just these things. I have rules when I trade. It's hard for me to explain it to someone that doesn't understand this. I have rules when I trade, right? If it's a large wick like that, I don't want to continue to buy it because I know how much volume it takes to fill that wick and create a new high. And I've been screwed so many times by doing that, that I have rules now that I don't do it. And in situations like this, there is situations where, yes, it can continue to fill that and continue to go. But I'm a trader of probabilities. I know that if I continue to trade like that, I'm not going to have a good probability of being successful because I know that those will come back and retrace. And then I'm stuck in drawdown or potentially hitting my stop loss. And then I say to myself when I'm reviewing, why the hell did I do that? And so I just have rules, guys. I'm telling you, if it was a shorter wick, like how it closed and it had a short wick and it retested this zone and came up, I know that that's the firecracker and could pop. I would definitely be in a buy, okay? But I'm explaining it to you guys why I held off from taking the buy here, okay? You want live analysis, you want my psychology, I'm trying to explain it to you. And I know I missed out on a buy. Looking at it now, obviously, I feel silly not hitting the buy button. But what would I be saying if I hit the buy button and it came up to there and then it came all the way back there and I'm in drawdown and then I'm saying, oh man, I was waiting for that pullback buy and now I hit a stop loss. So that's trading, guys. This is the hardest thing that's what I'm saying. You gotta at least just stick with rules. But if you're gonna break your rule, like if I broke my rule and said, I'm buying that candle, I know it's got a long wick, it retested, I'm buying it, I would have gone in with a smaller size. Does that make sense, guys? I would have gone in a smaller size knowing that I'm breaking my rules, but if it came back down, I would not have lost a lot of money and I would not have been upset with myself. It would have been another learning lesson, but I manipulate my sizing with the probabilities of trading, right? It's hard to explain, but I hope I'm relaying that to you guys. How much money have I lost before being profitable? $50,000, my life savings. I was a young kid. I was going into university. I worked 2 jobs while going to school. I pissed away my tuition. I pissed away all of my life savings. I lost $50,000. I was depositing $5,000 increments into a broker. High leverage trading, thinking I'm going to become a millionaire overnight, buying the highs, selling the lows, over leverage, losing that entire $5,000 in one day, in 1 week, deposit another $5,000, same stupid, silly trading, lose that money again, continue doing that. And then after I lost all that, I said, I'm either going to quit trading or I'm going to learn how to trade. So then I took 6 months off. I didn't deposit one more dollar into any accounts. I watch these candlesticks 24 hours a day, demo trading, just whatever, writing down, jotting down, what is a wick, what is a red zone, what is a green zone, what the hell's a pullback, what's a retracement, figuring out lot sizing, what's leverage, what are spreads, what are pips, all of this shit, all of the basic stuff, I had no idea. Revenge trading, getting upset, that was destroying me as a trader. So maybe some of you guys are in the same situation, but I want to know that we've all been there, okay? But at some point, you're going to have to learn the proper way of trading. So me waiting for a pullback, it's not like it's the proper way of trading. I'm just trying to, but some traders who are very impulsive don't understand that, okay? Now I can see that it's getting rejected in there, and I got a bearish candle. So I'm going to go in a sell now, okay? I'm in a sell, and I'm going to see if I can come down to the green zone, right? I'm in a sell now. I see it got rejected. It came lower high and pushing down now. I can see now we're going to trade down to that 50% of that blue candle. So I just want to see, I'm selling that red zone now to bring it down. I'm already, if I wanted to get in and out and pip and dip, I'm in profit, but I'm not. I want to see if it can break this and come down to the green zone. Okay, I can adjust my risk. Okay, right there, it's 100 pips, guys. Holy shit, like okay, if it comes down to that 9 EMA, that's 120 pips. That's going to automatic break even, okay? I'm gonna go right now, lower my risk right there, just to be above the wick of this candle. I'm lowering my risk right there, okay? Holy, like right there, I should have pipped and dipped. I know I did something wrong, and now the market is going to come and punish me. Right at that red line at 50% of that candle. My risk is right here, guys, just on top of this candle, okay? I'm not leaving it all the way up there. Because I still see that there's a lot of buyers that could flip this candle and drive right through here. My goodness, like this volume is insane. But see how if you wait for that red zone, okay, I was talking, guys, I apologize. I was talking and I should have explained that to you. But it came right in there. It got rejected. As soon as I saw it open and it was that bearish engulfing candle, that's when I took the trade and it dropped all the way down there, 100 pips. But I not secure. I didn't secure. So what I did was I lowered my risk. I brought my stop loss just above the candle. Okay, I'm not risking much, but I want to see if the sellers can continue to push it down to this 50%, maybe target that 9 EMA. But there's a lot of buying pressure, okay? So that's why I lowered my risk, because I can see that there's a lot of buying pressure still. And this candle is going to close in 2.5 minutes. That was like a 1 minute drop, like right here. Yeah, it was the 1 minute. That's when I went in, it just dropped and then it came right back in there. So you guys see my stop loss is just above that 1 minute candle, right at 46.20 right there. I will verbally let you guys know as soon as I get stopped out. But scalping is fast, okay? I want to make that clear. That's why sometimes I hold these trades, because I know it's very, very fast and sometimes you guys don't have time to react, okay? So I'm holding it, and now it's coming back down, but I adjusted my risk, okay? Now it's coming back down. So now we're coming down with that higher time frame volume. So I'd like to see, again, what type of reaction will we have near our low wick? Can we close with substantial black volume? Because then I can cut that in half, probably where I entered, and then maybe we can continue with one more black candle coming down. But there's support here right at the point of control of that big blue candle, just above that 9 EMA. And we still have that 15-minute bullish volume still in here, which is going to close in 1 minute. So we're going to get a new 15-minute candle opening in 1 minute. Okay, so I'm coming right back down. I'm in profit. I can close the trade right now if I like, but I'm not. Okay, I'm going to run it. I have a low stop loss. There's a good push down. There we go. Okay, so remember my target was that 9 EMA. That's where I'm going to take out 80% going into the new 15-minute candle, right? 100 pips, why not? Okay, I'm taking out 80%, verbally telling you guys right now. So took out 80% down there, and I got 20% running now with a break even. Okay, so I have no risk on my 20% going into the next 15-minute candle. There's where I secured 80% because I know I'm countering this blue move. So I know that the next 15-minute candle can come up blue. So I don't want to piss away 100 pips. Okay, but I have a runner to allow my psychology. If it continues to go, my runner will continue to go, but I want to secure money. That's my job as a trader. As I get into a trade, especially 100 pips. Guys, I'm telling you, some traders trade for 100, 200 pips a day, and that's their daily goal, and that's it. Okay, so look at that. That's a big candle closed. Let's just take a cut line real quick. Cut that black body in half, just because we're coming up blue, blue, blue. But let's see if we have a point of control of these sellers. Okay, hopefully it's maybe a lower high, a shallow pullback. But this is a new ignited 15-minute candle. Okay, full TP, if I can get my runner, would be the green box. Okay. Okay, so we got a wick rejection. We haven't came into the POC yet. There's a good rejection. Remember, this is a low wick. Okay, this is not a major sized wick. So if we can flip this candle, we can fill that wick, and then maybe we can break down a little further, right? And maybe we can start to come down to the open of this bullish candle, and that would yield 160 pips before we get into that zone right there. And then we have to understand that, remember, patient buyers are still waiting in there. Remember, I was looking to buy that pullback, but I'm just selling the top here, the red zone. So when it comes down there, I have to know that these buyers could bring it right back up. But see there that we have now equal lows. Okay, see that? See those? Now, remember what I was telling you about equal lows. That's a clue that the market is holding currently with the buyers. But see when it came back up, now that black volume is continuing push down. So there's the 15-minute break. Now we got 15-minute bearish volume right at that 9 EMA. Let's see if we can get one more flush down, and then we can secure some profit. You can go to a break even. You can close the entire trade. You can do what you want to do. Perfect. There's the drop. That's 130 pips. Down to that red line, that body would be 160. If it gets to the green zone, it's 200 pips. Just like that. I told you guys, I'm waiting for the pullback, but I allowed the blue volume come in the red zone, and then I sold the red zone down. That's what a scalper does. I can buy, I can sell. Guys, I'm going to close my entire trade right there. I'm happy. Broke 4,600. I'm grabbing my 20% right there. There's the target. That's my target. You guys can do what you want, but my target is reached. Holy, right there, guys. Congratulations, right? We sold that move coming up. Now we have to respect this green zone because that's where those buyers could have been accumulating on that big move up, and now they could be getting filled and this thing could reverse. If we still hold this, if you're still holding, we got to get the black volume to close below the green zone, then we make it red, then we can further drop down to where the initial move started, right here, right? But that's why red zone, sell, green box, or buy, right? So I'm a seller. So when it comes down to a green zone or right near a green zone, I take my money. Okay, see now the wick is right at that green zone. Those are the buyers. That's sellers like me closing my position where the buyers are, shaking a hand, making my money, exchanging now the transaction, and see how the buyers are bringing it right back up. Guys, there is a live transaction for you guys. As a seller, where to close a trade, where the buyers are. Now the buyers are bringing it right back up. They could flip this entire candle, be bullish, and come all the way through here. And if you got greedy, not respecting your green zone, that's why I have rules when I trade. You know, guys, I can't tell you in the past how many times I was in profit coming down here and the greed took over. I want more, I want more, I want more. And then the trade would just come right back up to where I entered. Sometimes I didn't even go down to a break even. I didn't even know what a break even was. And then I let the trade go to my stop loss, and then I ended up losing. And think about the psychology where you're up in money 100, 200 pips, you don't do anything, and then the trade comes back and hits your stop loss for 100 or 200 pips. That's like a 2, 3, 400 pip swing. That could really affect your mentality as a trader, cause you to revenge trade, cause you to lose focus, and just start you to put you in a slump. So I am a scalper. I want to make that clear to everybody. I come in the markets, I look for a move like that, I get my money, I get out. I manage my risk, I'll look for another trade. In that trade too, I might give back, but I manage my risk. Remember, I tell you guys, I manipulate my trading with the size of the wicks, the areas, all of these things. I hope that I'm relaying this to you live. It's different if I did this in a webinar and showed you, guys, I took this trade and then I make a video after the fact like most traders do and tell you that, but I'm sharing this live with you guys. I'm walking this through live with you. So I hope you guys understand, why did I sell at the red zone? Why did I close at the green zone? Even if I was not in a sell, I would have potentially been buying that, right? Did we not say to buy the green zone? Wait for it to come down. And if you got in a buy, you're in the money. Like with zero drawdown, as soon as it tapped right there, the top of the green zone, it's up 150 pips, right? So I have that. Sorry, guys, this trade was closed. I'm sorry. I'll get rid of it. Does that make sense? Boom, you got it. One trade, daily goal done. That's why we wait. Exactly, guys. Boom, it took me years to learn that, brother. Probably you too. Probably half the people on this call, right? Guys, I'm not in a hurry. I'm not in a hurry. I have all day to watch these markets. I'm doing nothing else. All I'm doing is going with my kids to play some arcades, and we're going to go bowling after this. Like, I can literally sit at this computer for hours upon hours, trade stress-free, and wait for executions with alerts. I don't necessarily have to stare at this computer all day. See here how I have an alert? See, it's an alert there. If it eventually comes down here, I could be bowling. I might be at the bowling alley with my kids. I get an alert on my mobile and I watch exactly what's going on here. Maybe it will come down here, break, come back up, consolidate, and then I go in a buy, and I'm not taking it to all-time high. I'm taking it again right to the next zone and manage my risk and get some pips while I'm bowling, right? When I was in Europe for the last couple of weeks, I'm walking around with my mobile. I set up my charts with some alerts. I'm having coffee and I'm watching. I'm getting alerts with Dave sending out signals. I'm in the Discord with the snipers watching their charts. Do you know how many trades I took off of you guys in the commodities and index channel with you guys sharing your charts just like this? Golden Light. Perfect. All of you guys, Rob, Forex Borex in here sharing his knowledge. All of you guys in here, like, look at, this is not me. This is Forex Borex, a standard lot from 4575 to 4620, $5,500 trade. My God, like this is not me. This is not Dave. These are snipers in the group. This is life-changing money. Like even here, Sherry, unbelievable. This is your personal account. Look at this. Like, look at this. This is unbelievable, guys. Okay. Guys, let's make trading patient and disciplined. Okay. And you see why I take my money out? Because if I don't, you see how it comes right back up, right? And I don't want to piss away that much money. You know, that's good enough. Let's not get sloppy with trading. If you're going to draw a zone, respect your zone. Right? And then when you're done, clean up, tidy up your chart, right? I move this up now to the support level right there. See, I see we broke the 9 EMA, it came down, but what held it was that zone. There was the first retest, there's the second retest, okay? Now we are coming back up to the red zone. So what I look for is maybe another double top, like where it comes in, comes back, there it is, lower high right now. And then if we close below here, then it might have enough to break through here and come to this, and then that might be a buy signal. Unless we continue trading down today with that big daily bearish candle, okay? But we're in a range right now. So if it's going up, it's coming down, could go up. These are 100, 200 pip ranges, right? So do I have to now just go right in another trade right away? No, I can continue to wait. I can now relax. If I've hit a trade, I can relax, see if buyers can close above here. Will sellers continue push it down there? Again, I can just follow the zones. We're in the middle of the zone. Follow again. Excuse me, if it comes in the red box, follow again if it comes in the green box, just like that, guys. Guys, we have 400 viewers on the call. I hope you guys all learned. If you can hit the likes on YouTube and subscribe to the channel. This is live trading and live education and live analysis, okay? And we're not fake gurus around here. Like, we do this every day for a living, right? So I have no problem sharing what I do with you guys for free on YouTube. Okay, we didn't just start yesterday or last week. We've been doing this for 6 years now on YouTube, almost every single day. Okay, and it's the same thing. You can watch a video from us 6 years ago, and I'm still doing a top-down analysis. I'm still cutting candles in half. I'm still breaking down what a hammer is, what a bullish engulfing candle is, going through the news with you guys. So it's very repetitive what I do. Everyone says, Ron, you do the same shit every day. I say, yes, that's what I want to do. I want to do the same shit every single day. That's how I stay consistent, and I don't deviate. Every day, any security. See how we didn't even look at Dow Jones today? Like, we don't even need to look at Dow Jones. But if we do, let me do a top down on Dow Jones. Let me walk through Dow Jones with you guys, okay? Let's do this together again. This is the 5 minutes. Let's go to the daily, okay? So follow with me. Here's the daily, right? I can see yesterday was FOMC. Look at just the daily candles, right? Consider it a 5-minute candle. This is a structural candle. Yesterday's FOMC. It closed below these two blue candles. That's a perfect candle to cut in half and find the point of control, okay? And then look at today. Look at the wick, right? Remember I was talking about wicks. That's a very short wick. It closed 95% right near the low. When we originally opened, there was a lot of dip buyers, right? Look at the massive drop on Dow Jones. So as soon as the daily candle opened, there was dip buyers buying the dip, right? And they got sucked in. They bought, and we're still below 50%, and it got rejected, and there's the pop of the wick, and there's the drop right there. Like, you know, when I'm scalping, that's where I take a sell, and my stop loss is above the wick, drop, could be, and that's a big drop. That's not a small drop. Like, look at when it broke the wick to how low it went. That's 300 pips on Dow, okay? Now, let's just break this down, okay? Okay, so most obvious, right? When we start a daily analysis, most obvious. What was the highest point right there, okay? I trade Dow every day, so I know that this is the all-time high, above 50,000, right? There's the zone, what I talk about, the zone, to those bodies. So when you make a zone, go to your point of reference, point of interest, your line, make it red, green, yellow, orange, whatever color you want. I make it red. So whenever I see a red box, it reminds my brain that those are where the sellers are. That's where the supply is. That's where, if I'm in a buy, I should consider maybe closing some profit because that's where those offers are waiting, okay? And I stretch it into the future. If it ever comes back in there, I know what it is. So you see how now Dow, since we hit the all-time high in February, see, we've been making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower low. And if we come back in, we have to mark up the point of control of yesterday's candle, okay? So another zone is right here. How do I know that this is a zone? Well, just look at your pivots right there. Just look at pivot points. The market came up and stopped right there. Came back down, came up and stopped right there, okay? So that's a double top. That's a point of interest, right? And then there's where the candle confirmed close above. And look at the retest. Look at those wicks. Had you waited for a retest and bought, you're in the money, okay? There was now a fake breakout where they broke it and came back in. That's why it's important to wait for bodies to close because sometimes they'll suck you in. The market needs to do this to suck in liquidity. It knows that we are very impatient traders, right? That's why I'm saying if we're trading on the 5 minutes, we have to be extremely disciplined to wait for a 5-minute candle to close. Look at even if you're trading daily candles, but look at how many times it just impulsively broke, impulse, the volume closed above the yellow line, retested the yellow line, moved up. Now we got black volume closing below the yellow line. See when it came up here, it's resistance, then we continued pushing down. So that's a point of interest. If you want to draw a zone off of that, easy peasy. Just look at the bodies above, right there, and kind of look at those two bodies below. There's a zone. I'll make it neutral so you can see what I'm doing. Okay, so it's a neutral zone. Going into the future, still neutral zone. Going into the future, now I see it's a bearish zone. So that's a red zone, right? Stretched into the future. Now what I do at that yellow line is I add an alert there, okay? Whenever Dow comes back up here, I don't know if it's going to be tomorrow, next week, next year, but whenever it does, I will get alerted there. My phone will give me a notification. My trading station will give me a notification that when it comes in there, I might continue selling down with the market. If the buyers prove to me they close above there, I make that zone green, and that could be the support needed to take me to the all-time high zone, right? That's all I do, okay? Now let's continue moving down. Look at, there's a pivot and there's a pivot. Let's go to the best pivot, this one, okay? Because there's a body close, body open, a wick, and a wick. It's already been retested 2 times. And then you see that last pullback right there, higher low, continue to move up. There's where we draw our zone. Look, okay? Look at the zone right here. Look backwards. Look backwards. When you look backwards, it tells you everything you need to know right there. Do you guys understand what I just did there? Okay, I'm not just drawing a line, I'm drawing a zone. So there was a red zone, red zone. There was the blue candle that confirmed to make it a green zone. Now I see the pullback retest. Okay, so look at, if you're a swing trader, okay, I'm showing you just like a 5-minute trader. If see that big blue candle, if you bought the next day on excitement, FOMO, you're in drawdown. You're in drawdown, you're in drawdown. Possibly you're going to get stopped out or over leverage your account. But it took 1, 2, 3 days, 4 days to retrace back into that zone. And had you bought the pullback, you're in the money, right? Again, it came back down, wicked off there. You waited the next day, you got a bullish engulfing candle, cut it in half. You had a wick, a wick, a wick the next 3 days to continue to buy to take you up, okay? So that's why sometimes you got to wait. And there's a double bottom at the zone over here, okay? There's where it came in. There's your neckline, double bottom. There's your candle closing above, cut it in half, and there's your pullback trading. And could be your weekly goal, right? I'm not a swing trader. I'm a swing investor, but I don't swing trade Forex. I swing trade options and things like that. But if you do this, this is how you can do it. Now, you see that zone stretched into the future? Look at today's low wick. It tapped right into our green box today, okay? So are we going to build up here to take the Dow back up this week, next week? Or is it going to close below here and we're continuing dropping? Right now, we're in a significant downtrend, okay? So now what we can do is concentrate on, first thing, yesterday's bearish FOMC candle. See how it closed below this blue candle and this blue candle? It engulfed them. That's a structural candle. So first thing I do is I want to find the point of control and half of that, okay? Opening balance. Look at the opening balance. 47,000 on the dot, okay? So when I was talking about psychological numbers on gold, there's psychological numbers on US 30, there's psychological numbers on NASDAQ, psychological numbers on USD, JPY, and so on and so forth, okay? I told you, we're trading a live auction. This is auction theory, okay? 47,000. Opening price, our closing price, okay? Now, there's my 0.5. Draw a line, okay? As a point of reference, point of interest, whatever you want to call it, 46,530. There's my point of control of yesterday's FOMC, my red zone right there, okay? It's like a crosshair on a sniper on a gun, right? It's right there, okay? That's what we're targeting. We're snipers, right? You know, when you got a gun and you're looking in that crosshair in the scope, that's when you're looking to take a kill shot. That's exactly where we're looking for kill shots, right in that zone, right? That's where most of the transactions are going to happen. Now, stretch it into the future, right? Have we retraced back in there? We have not. How do I know that? I can see today's high is right there, okay? So I've acknowledged that, right? For long buys, just like I like to see maybe a bottom here produced, maybe come back in here, maybe we'll go back down, maybe a double bottom, maybe a higher low, and then it physically breaks and closes above there. Then I flip that zone green, and then I'm buying off of that. And what am I doing? I'm looking to fill that daily wick, just like I do on the 5 minutes. Same shit. And what could I be targeting? I could be targeting the next kind of point of interest where bodies have more touches. There's a body close, body open, a wick, and a wick. And I look at the number, 47,900. Nice psychological number, okay? We're nowhere near that move right now because we're still moving down. We got lower highs, lower highs, lower highs, and lower lows. So let's now figure out what happened with today, okay? So there was the big FOMC drop, low wick. There was the close, open. Always acknowledge your daily close and daily opening numbers on all securities, please. Okay, it's very important. And then you see here, we were initially blue. Initially, buyers bought the dip today and got sucked in. They bought, and that's the highest point. So that's my purple line letting me know that's the high of the day. Look at the number, 46,300, psychological number right below our POC. Lower high, they pushed it down back to the opening price. There's that short wick. Okay, so when you got that short wick, that's that firecracker, you light it, and there's your pop. Continue to push down. So it's very bearish, bearish, bearish. We came into that green zone now. We found a bottom right in that green zone, right there, 45,740, 750. We got buying momentum now, bringing it up, but we still have this bearish volume in today's daily candle. It's basically like kind of a spin top. Are we going to now consolidate next couple days in here? Are we going to see it move up next week? Or are we just going to flag in here, consolidate, and more sellers are going to continue to push the markets down? We've got a lot of developments going on around the world right now, so it's hard to say. But what I see is sideways right now. So I break this daily candle down now into the hourly increments, okay? So now I can see the big drop was yesterday, 8 a.m., there's your flag Tetris piece. Cut that bar in half. Why do you cut that bar in half? Because that's a structural bar. Look how, look at these. These had no volume, no volume, no volume. And then you got a big black candle just print out of nowhere. Cut that thing in half. And same thing you do on the daily. Figure out the point of control, whatever you want. Just cut it in half. See, when I cut it in half, it lines up with that support pivot. For hourly, I use a white line. Look at the number, 46,950, psychological number, continue pushing down, pushing down. We came back up, it consolidated in here, pushed down. Now look at the hourly candles. They're barcoding, okay? We had a big drop at 8 a.m. It came back at 9 a.m. We bottomed out at 10 a.m., black candle. We came up, lower high, lower high, lower high. Now we're not producing any more lower lows. See, that last hourly candle, okay, came down. Did it break the lowest point day? No. Buyers came in and it closed 50-50. So now we just opened again on the hourly. Came up, did not fill the wick, coming back down. But the sellers are not filling that wick to drop it. So we're in a two-phase consolidation, okay? And look at how thin the volume is. This is the worst volume to trade. What you can do as an hourly trader is box this in. Where? To the volume, like right there. That's where you can box it in. Okay, you can go higher if you want, from the purple line to the yellow line and expand the zone. That's fine. But I like to just stay where the volume is. Okay, like right there and there. Okay, so we're in a flag. Could definitely continue pushing down and break the low day and continue dropping, or it could come back up. I look for blue volume to close above here because then it can fill those wicks, take out that daily point of interest, and continue to drive up. Now, you see below the purple line and the green zone, I don't have any lines except for that point of interest and nothing below. Now go look backwards. I know I have a purple line. Anything below the purple line shows me when previous hourly volume was trading. Here it is. So previous, I can look at date, November 20th. Look, November 20th. The hourly volume came right here and came back up, double bottomed here, November 21, and pushed up, okay? When were we below here? There. Look at the times how much liquidity was grabbed below here. First time we came below that purple line, October 10, dropped to that daily point of interest, came back up. Then it came back down again. October 14, big wick. Look at the blue candles produced off of there. Because you got to learn, guys, that they came down there to trigger all of those double bottom pending orders. We always say the double bottom traditionally has more stronger volume. And there you can see 1 hour, 2 hour, 3 hour, 4 hours took out everything to the left. And right there, you can see it came down, it pushed up, and blew up, okay? Then it came down a third time, a triple bottom, right again there. And then triple bottom should technically have more momentum, more volume than a double bottom. A quadruple bottom should have more. Five topple bubble. What is a five? What is a five? We got a single, a double, a triple, a quad. What's a five called? A five bottom. What is that called? Senko? Cinco bottom, pente bottom. Okay, yeah, we got to learn Latin and we got to learn and your 6 bottom, 7 bottom, 8 bottom, shit like that. Okay, all of those should traditionally have more volume unless they close below, then we're dropping. So you see how this daily point of interest on the hourly has been support from October 10, October 14, October 17, and then when it came back down, it produced a higher low November 20 and November 21, and we might be coming all the way back down today. Like this look, we're right in there again. Okay, so when you're looking for solid buys, down in here. If we break this yellow line, then you got to continue to look at structure right over here. You got to go back and look at September, how we were trading, okay? You got to do some type of backwards analysis, okay? So just before I go continue, see what gold is doing, okay? It came up and it's continuing now to push down. So I'll probably get an alert at this red line, okay? Because I have an alert set there if it gets down there. But you see, if it doesn't get down there and we build back up with blue volume, it could take that leg back up, okay? So if you're still trading gold, still in this range right now. Okay, sorry guys. I want to just teach you guys about the hourly and some levels. Okay, so this is where we are right now. So it's still building inside here. Let's go to the 5 minutes on the Dow, and you see it's not trading good. Like it's not the best. We're just stuck in this range where it can come up, it goes down, it comes up, it goes down, it's coming back up. But look at now. We have one bottom there. Okay, 1025, 1030. The lowest point of the day on the 5 minutes. Bottom one, we had a bottom two. So there's our double bottom on the 5 minutes. One bottom, our neckline is right there. Second bottom is right there. But what does Ron say? Traditionally, the second bottom should have the volume to continue to break out. It failed. How do I know that? Because I see that it did not close above there. So it failed, and then the sellers brought it down. Now the sellers failed because they failed to come back down and break that. So I see now the buyers are producing a higher low and technically trying to bring it back up. But look how thin the volume is, okay? We've lost our volume, okay? So is it worthwhile trading this shit right now? Yeah, you can if you want. If you want to look for some scalps and things like that, but this is not the greatest volume, okay? So then you got to be selective with the volume you're trading. I rather trade clean volume. See these candles, half of these candles, I can't even cut in half. Like there's nothing, they're not structural candles. I can't cut these things in half. The only one that I could basically cut in half was this one, okay? This was the first bottom, big body candle. It engulfed this one, this one, this one. If I cut it in half, like right there, found the point of control, I could have bought that pullback, made some money. If not, came back down to break even, came back down. This candle too, it's a, see where it's black, blue, black, and then structural candle, blue closing above. If you cut it in half, found the point of control, you could have bought that pullback, made a few pips. But nothing going on right now. This is like mumbo jumbo price action, okay? I like clean trading volume. I like this. Like this is clean. Like you got big black candle coming down, cut it in half, pull back, sell, cut it in half. You can continue selling. You see it's making lower lows. You got big body candles, easy to cut in half, easy to trade those. When we got this type of volume, this mess, this is very hard to analyze. So what we got to do in a situation is like this, is let the market accumulate and let's watch maybe our higher targets. Let's watch and see if the buyers can close like above here near the yellow line, daily point of interest, or if the sellers can close below the low of the day and push it down further. Otherwise, it's just accumulating inside here both ways, okay? And if I want to scalp this, I get my ruler. I look from maybe if I'm trading from here to the top, it's good. I can still make 60, 70 pips, maybe 150 to the top. That's great, but I got to understand if it's coming up, it could go right back down. If it's going down, it could come right back up. Otherwise, leave this for now and look at another security. Look at gold. I told you guys, please listen to what I say because I talk a lot, but I'm talking for you guys. Look, it came down there. And what did I say? If it comes back up and closes blue, we could be looking for a buy off the green zone. It's an ignited bullish candle with a short wick. That was an easy buy on this candle. Okay. I know I didn't do it, but I wish I did. I wish I was on this chart. And that candle alone, bullish ignited, filled a wick as 20 pips, popped to that bars 55, filled that wick as 70, and came right up to there. 150 pips in one bar. You could have pipped and literally dipped. Okay, do you understand what I mean? Like it broke that green zone, they grabbed the liquidity. I was waiting for the signal down there, but I told you guys, if it doesn't come down there and that blue volume comes up and closes above the green zone, that could be your buy signal. And when you get the bar you're looking for, ignited with a short wick. That's that firecracker and pop. But we are still trading against a trend. Okay, so that's a counter trade. And if you, unfortunately, this happens to me too. Sometimes it goes up 100, 150 pips and I don't do anything because I want more. I want to reach this red zone and then they push it down on me. Okay, it happens. But that's why you need to determine if you're a scalper. Sometimes scalpers are just trading one candle at a time. Sometimes I'm in and out before the candle even closes on 1 minute, let alone 5 minutes. Okay, so I know that this candle just happened, it moved up, but I'm telling you that setup was a perfect setup for a buy. What happened up here, then you got to understand what the structure above and your counter trading. Those are other rules that you have to have, okay? Now, they've rejected it. If the sellers close it below here, then there's going to be black volume that's going to continue to push through here, okay? See how the sellers are protecting that against that big, strong, bullish candle? Guys, today's more, I guess, a learning class. Sometimes they turn into this. Sometimes I'm scalping and I'm trading the markets. I don't dictate the way how these calls go, but hopefully you guys are learning and can practice this stuff, okay? Because I promise you, if you understand what I'm saying, how these specific candles are produced at these red and green zones, then you're going to understand why to be patient and disciplined to wait for these zones and how to trade these zones because you know what you're looking for, okay? And guys, someone asked me, Ron, where did you learn this? I'm telling you guys the honest truth. I swear on my kid's life. I learned this myself, just like this, by watching candles, what they do, and visually making, writing stuff down on pieces of paper, taking screenshots of this and memorizing this stuff, practicing it. I don't even know. When you guys ask me, Ron, is this ICT? I'm telling you guys the honest to God truth. I have no idea what the hell ICT is. Honestly, I'm telling that with the bottom of my heart. I'm not disrespecting anybody if that's what you do. I don't even know what the hell that is. Okay, this is how I trade. I don't even know what ICT is. I do my top-down analysis. I put alerts on my specific areas. I look for patterns I recognize. I cut bars in half. I look for points of control. Okay. If that's similar to ICT, okay, that's fine. But I don't know what the hell ICT is. I don't even know what it stands for. Honest to God, guys, like I'm not dissing anybody that trades with ICT. I don't know what it is for the life of me. Inner circle trader. Okay. What does that mean? Rob, tell me, educate me. What is inner circle trader? He trades everything. No. But like, what is the strategy? What is the strategy? Everyone asks me, Ron, do you trade ICT? What is it? Like like when someone asks me, Ron, what style you trade? I tell them I'm a zone to zone trader. I'm a scalper. I go from line to line or zone to zone. That's what I am. I can clearly explain what type of trader I am. I don't know what that is. And someone will say, Ron, you're lying. I'm telling you guys, I swear on my kids, I don't know what that is. Okay. And I hope whatever it is, it could be another strategy, guys. There's millions of strategies. Okay. There's millions of mentors and communities and shit like that. But what I do is, guys, give me any chart, anything, any security. I'll show you what I do. Come, what do you want to see? You want to see, let's do something. Let's do oil. Let's have some fun with oil. Okay. Here's oil. Okay, so oil, I'm going to get rid of my indicators. Okay, we're going to start with a naked chart. Okay, let's just hide our indicators. Okay, I'm going to show you what style trader I am, what I do. Okay, this is oil on the 5 minutes, right? There are candles. I know that that's a bullish ignited candle, all of this stuff. Okay, top-down analysis. Okay, I don't even know if ICT does top-down analysis. I have no idea. But what I do is top-down analysis. Okay, start on a higher time frame, daily. Okay. Oil has been going crazy the last few weeks because everything that's going on around the world right now, okay, with Iran. Okay, so first thing is the most obvious. Look at that wick up there. That's an obvious wick. I'm on the daily. I make it yellow. I trade oil, so I know that that's not an all-time high. How do I know that? Let's go to the monthly, and I'll show you how I know that, okay? Because I know I traded oil back in February, March of 2022. That's when Russia launched the first missile to Ukraine. February 24, 2022, we were trading it live. If you go back on YouTube and you scroll down, you will find a video. February 24, 2022, we were trading it live on YouTube and Zoom. I remember vividly, okay, because we were trading gold at that time when the first missile launched. Now I can see, okay, that was $130 a barrel. I spoke to that about before. But I even know that that's not the all-time high because I know I've been trading oil since 2008 when it hit $146, $147 a barrel, okay? So that's not our all-time high. If I'm marking my all-time high, there's my orange Donald Trump line right up there, his orange face, okay? $147. Since then, it came up, the Ukraine and Russia war, 2022, February, lower high, push down. But you see, it's not pushing all the way down. There's your double bottom. I was telling a lot of people at $55 a barrel, guys, this is when we were doing you guys remember we did a swing trading class on oil? I was showing you the 4 hours. At this level to consider swing buying. It was at a nice level of 55 bucks. There's your double bottom. Double bottom traditionally has more volume. Okay, whether there's a war, sometimes there's wars, right? I've been trading I didn't start last night, okay? So I've been trading for a long time that I understand wars can affect the way securities move, okay? So this is the monthly. Go back to the daily, okay? Most obvious levels. Okay, since that latest pullback is right there. Look at that range where we hit $120 a barrel and then it came all the way back the next day to $77. And spreads are insane on these. Okay, so if you think you're going to intraday trade or scalp these, very difficult unless you have a good broker. Okay, so there. Now, is there anything else I can look at with all of this? Yes, you can see here, body to body. There's a pivot point, body, wick, and look how it's holding as support. So I see $90 is still holding as support, okay? Now, what do I have? The most recent highs right there, $100, psychological numbers, okay? I don't know if ICT talks about psychology, psychological numbers. I've been talking about psychological auction theory for the past 6 years. $100 is a psychological level across the board. It doesn't matter what security you're trading. If you're trading Bitcoin, 100,000 is a psychological level. If you're trading the DXY, when it reaches 100, that's a psychological level. It does not matter what security you're trading. Psychology matters. So I can see now it's basically like double tops up here. So there is a zone on oil right now. I can bring it down to the bodies right now. So I go to the 100, I see those wicks, I bring it down to the bodies. Red zone holding across like this, okay? Can I see a green zone right now on oil? I can, but I want to find those bodies too right there. And I can see now there's a wick, a wick, a wick. All in here is a green zone, okay? I know it's a big zone, but this yellow to yellow is a zone, okay? And I see that we're just sitting in a bull flag right now on oil, waiting for shit to develop this weekend. Is there going to be further escalation? Is it calming down? Donald Trump says this is ending. I can't see it ending anytime soon. I just see escalation. I can see oil continuing to go. Will it fill that entire, look at the size of the wick. That's not a small wick to fill. That's a big wick to fill. So we're going to need ongoing escalation in the Middle East to continue to drive. I talked about this, the supply and demand of oil, okay? So now let's just, what's been going on? So if I'm a daily trader, trap this shit in this zone, okay? What is that? That's the trap zone, sniper trapping gap, okay? I can see it's going blue, black, buyers are buying, sellers are selling. Eventually we're smart, okay? It's either gonna continue to trade in this zone, right? And continue to accumulate, or we're going to get a break of buyers breaking it out, maybe retest this green and coming back up. Or you're going to get the sell, a black volume coming down here. The war is over. Everything is good. Oil is going to start sell off. Okay. So that's your bigger moves on the bigger picture. I'm getting an alert on, you see right there, XAU crossed the alert. So now I'm getting an alert on gold coming down. Sorry, let's go to gold. 1 second. Five minutes. My bad, guys. Okay, so gold is giving us an alert now. Remember, at that original buy location where everything started. See what I mean? If you were waiting and waiting and waiting, you had to wait an hour, but it eventually came back down. Okay, so patience, discipline. Now it just got a wick off of there. Okay, so I could just buy right now blindly, but this candle is going to close in 1 minute and 45 seconds. So why don't I just wait for it to close? It looks like the one bottom, there's the big neckline, the red box, it's coming back down. This could be that double bottom that wants to come up, close above here and try and push up. But this could be still now bearish volume that closes below here and continue to push down. Okay, so sometimes we got to wait for the bar to close, because if it closes below this green zone, I'm going to make it red, this zone. This could be our first bar that's closing below here, because it was an impulse, the first one that never closed below. Okay. And then the market could still be selling off, right? Yeah, another thing someone said, Ron, you're a price action trader. That's correct. I trade price action, okay? Price action. Okay, so here's the close. Remember, we're coming back down to this zone, okay? So who is considering a buy? If you're considering a buy, we need a few things we need to look for. Or who is considering to continue to sell, okay? There's a lot of things to consider here. Sorry, let me just put my things back on the chart here. Okay, so the candle's closing now in 10 seconds. Got a good wick off of that line, okay? That's 50% of that candle. It's got a good wick, but it's still got bearish volume, okay? So where is it closing? Is it closing right below that green zone? Yes, so it's red currently. So, but we got a good push up. It's bullish ignited right now, the candle, okay? But that's a big wick. So sellers got to continue to fill that wick down. So if I take a buy right now, I know that I'm trading into that red zone and they can push me down. So I know that we got a good response out of there. I'm not in the buy. So what I want to wait for now is, can the blue volume prove to me that it can close above this red zone and then pull back in here? And then I have no problem buying that and taking back up to there and possibly up to there, okay? But if I buy right now, I know that we're trading in the red zone and they can push it down. However, the sellers need a lot of volume to continue to fill that wick and push down further. So it could just come down a little bit and create a higher low and buyers could come back in. So then it could just consolidate here for a little bit. But we got the response out of there, okay? I'm not a pending order trader, okay? But some of you guys use pending orders. This is how you locate where to put a pending order, okay? I did it in this situation, but some of you guys do. You have a pending order in there and you're right into 130 pips of profit with zero drawdown, okay? Why? Because you targeted that candle that started that bullish engulfing run right there. Remember, I was waiting for that first candle to pull back in there. I never got it. I was waiting for that second candle. It never got in there. I was waiting for that third candle. It never came in there. I was waiting for that candle. It never came in there. And remember what I told you guys. Trading is a game of being patient, okay? The more the volume moves away from this zone, the more pending orders get filled in here. If you guys understand order flow, okay? So there's more than just price action, it's understanding order flow. So this is now to prove to you that when it came down into here, all of those pending orders got picked up and it came back up. But there wasn't enough orders to flip the candle and turn it. So now when this one is opening, it's coming back up. It's still bullish, right? It's still building. But what I said is, I want to see a blue candle close above this red zone. Now it's coming back up, engulfing. We've got a good wick on our 15-minute candle, but our 15-minute candle is still bearish. And we're going into 2 minutes into 1 p.m. So I know that we're going to have an hourly switch up, hourly momentum. Maybe we're going to start to create another bullish leg. But you see, the first response of there, that's why I like adding alerts to my charts, okay, is that specific reason. That's what keeps me patient and disciplined. Oh my God, Alex, you made $500 today. Amazing. Following the analysis, took the short and now 2 times the long at these levels. Beautiful, Alex. I could not have said it better myself. Sometimes, Alex, just waiting for the volume to come to these zones, you can do really well. I'm not going to say it's always like this, but you have a high probability of being more correct more time because you're trading with the bigger orders, if that makes sense, guys, okay? Not always is this 100%, but trading is not 100%. Trading is all about trading with high probabilities, right? And using proper risk management. If you do those two things every single day, you trade with high probable setups, you use proper risk management, and you're patient and disciplined, I'm going to say this, okay? And I'm going to say, I can pretty much guarantee that you're going to be a successful trader if you just learn those three principles. Now, those are the three hardest principles to teach someone and to learn by yourself. Those are why it takes years and years and years to learn this. But that's why trading is one of the most difficult things to learn. But once learned, you can set yourself up financially for the rest of your life. Like, no one can take this away from me, what I know. I'm telling you guys, I went to Europe 2 weeks ago, like for 2 weeks. I just got back. And I was walking around all over Europe with my mobile trading. No one can take that away from me from what I've learned. I can go literally anywhere on this world, anywhere on this planet. As long as I have a mobile, a laptop, Wi-Fi, or an internet connection, I can print money. Not always, but I know how to do it, okay? By learning the art of trading. So you see there how it came blue, blue, blue in the red zone. I'm not comfortable taking a buy until I told you guys I see blue continuous volume closing above there because it's still a red zone. I know that those buyers are buying into sellers and the sellers are pushing it right back down, okay? But are they coming back down here in this zone? I see a higher low. So we got to go through that process again of just waiting to see if the buyers will accumulate more and close above here. Then we could look for buys up there, or sellers might come back down here, and then it's naturally moving down with the daily selling volume, and then we're making new lows, right? And then this double bottom is not holding, okay? Not all double bottoms are 100% buys. I've seen double bottoms break and then it continues to go. But now again, we got another blue candle. So this blue candle has a job to do. Its job is to continue to fill the wick and create a high. Remember the first one here when we were talking about over here where it came up, back down, closed. It came up again, did not fill that wick. Remember it was blue and I said those buyers got trapped and then it came back down and closed there. Then we went into 11:45, new 15-minute candle. That was the big structural bar that closed above. I cut it in half and I've been waiting for that pullback. That was the first pullback. So same thing here. We got to see a blue candle continue to fill that wick and close above. Because if it just comes up, lower high, sellers will continue to push it down. You guys understand? It's basically like the same situation over here. It just now produced a higher low off of this. So it's building, right? So you can either buy or sell here, but it's better to wait for confirmation, right? So I was doing oil and then we just flipped over because of the alert. But same, right now, just because I see a blue candle, I don't want to just buy because I see a blue candle because I could have done it there, and I'm in drawdown. I could have done it on that candle was blue. I could have done it on that one. And then same with this one was blue and it can just continue push it down, guys. So let's just be patient. We see that it picked up the orders right there, but it's not continuing. Right? We've got a lower high, lower high, lower high, lower high. So if we continue buying, we're buying into sellers, right? And they still are offering and pushing it down. But we haven't created any new lows, right? We've got a higher low. So this is where we're in that that situation where now we've got a shooting star. It's taking that out. Now it might be coming down in here for more pending orders to get filled in here, okay? So I'm holding off on a buy right now because I still see the selling pressure. There was an opportunity just off of that bar to get in, pip and dip, but the overall still buyers are not there. They're not closing with confirmations. It can still build, absolutely, but we got to wait, right? So while I'm waiting, guys, you guys can give me a heads up if anything happens on here. I just wanted to finish up that oil with you guys. So I was doing the oil with you guys. I was on, was I on the daily? Okay, I was on the daily, right? Okay, so what I do is with yesterday was FOMC, it was originally bearish, came back up, closed in there. Again, daily candle, did it fill that wick? No. Today it opened, okay? So there's my opening price right there. Yellow line, $99.82. It was originally bullish, but see the bullish candle on did not fill the previous wick to continue go high. So if you bought early and you see it, look at the sellers. They brought it back down to opening balance. It was a big black candle coming all the way down there. There's my high and lows of the day. Okay, that's my highest point. Sorry, guys. I just wanted to show you that we can do this with any security, okay? And then you see the lowest point, $95, making a higher low. So it's coming right back up. But the volume is just blue, black, in a range, okay? So we've got some levels here. Now, what I like to do is, I know we're in a bullish flag on oil, can continue to go up, but it could also come down, okay? So now I go into the hourly. I break down the hourly. Okay, there was that huge move when everything started, Sunday, March 8, all of everything. And then now look at the hourly candles on oil, just going up, coming back down, going up, down, up, down. Look at the wicks on these candles. This is disgusting price action. How do you trade these hourly candles with big wick? Like, look at all spin tops, okay? This is horrible price action volume. I don't like this shit. But if I had to trade this, and this was the only security that I could trade, and there was no other securities, I got to do some type of analysis. There's an hourly, okay, 11 a.m. It was very bullish. That's what made my high of the day. It opened right there and it closed. So there's an hourly point of interest. Bodies close and open. White line, okay? Also right here, I can see there's good support there. Good support, more touches, data touches, right? Right here is a good place to place a line. Why? Because I see a body close, open, wick, body open, right there, close, open, wick, body, okay? And then look at the number, $97, okay? Nice psychological numbers. So we're just trading in this hourly range right now. Can I do anything with this previous hourly candle? Sure, I can cut it in half, but it's not a structural candle. It did not engulf this to engulf it, right? It just came down and closed right there. So I know we could just be barcoding blue, black, could go up blue, could come down black. If I go into the smaller time frames, this is what I got. Okay, there was a big explosion here at 11:30, came up. That's what created the highest point of the day. Again, that was when Donald Trump was talking about Iran. Remember, I told you guys, I was reading his remarks, and that's what caused that to go up. He was done talking, it came retraced right back down, came up lower high and pushing down. So now you're trading right in between the 9 and the 200 EMA. This is where you get consolidation. And what I could be doing is now targeting buys above the white line. So I know it's hourly resistance. If I get blue volume closing above there, could retest this. Then I go into a buy to trade up to 50% of that candle to the open to maybe the highest point of the day. I could also sell oil. If oil comes below this white line, could come up to resistance, then we're trading down to the lowest point of the day, okay? And I can set an alert right here, add an alert, created, add an alert right there, created. And I can walk away from my computer, and I don't care what happens inside here. I don't want to be part of this. I'll let the buyers and sellers determine which way it will go. And eventually it's going to come to make a move here or here. And when it gets here, it's not always just come up here and go up. Guys, I understand what are fake outs. I understand what is liquidity. I understand it could come up impulsively and then get a big wick and get rejected back down and retest this. Then that's my sell setup, right? Then I know in no volume closed above. It was a big bullish impulse candle breaking through here. Just like this, how this was a big bullish impulse candle. They rejected it back down, then it moved down. It just traded above here just for a little bit, then it went back down. You got to understand that there could be fake outs in the market where it comes up and nothing closes, comes back down, retest that shoulder, and then drop. Same for a buy, okay? Down here, if it comes down and closes below, I use that as resistance to continue dropping. However, I know that, like right here, how those candles came down, nothing closed below, then they came back up and retested this, and it was gone. So I understand that that can happen, guys. I trade price action. I watch this shit on a daily basis. It could break down there impulsively, catch a wick, and close back above there, retest this. That's still the hourly support. Then we're going back up, okay? But right now, I don't like gold or oil just because of the spreads. Like if I look at my spreads right now, I have a really, really good broker, and my spreads on oil right now, I will tell you, XAUUSD is 4 pips. It's fluctuating from 2 to 4 right now, 2 to 4. Okay, why would I want to trade a security with 2 to 4 when I can trade gold, which looks cleaner with half a pip spread, right? We can go back to gold, and I can trade gold with half a pip, much cleaner spreads. I don't have to give back too much. I know that there's going to be less slippage with gold because oil's too erratic right now. I could go and trade US 30 have a fixed spread of 1.2 with no commissions, or I could trade NASDAQ with a fixed spread of 0.8 with no commissions, right? I can be selective. You can be selective with what you want to trade, okay? You don't always just got to trade whatever your best friend's trading. Trade what is best today in the market. Trade which volume looks best to trade. Trade which has lowest spreads if you're trading Forex, and just trade which is cleaner moving volume, okay? And be very selective. You don't have to torture yourself with shitty volume and trade that. Look at my watch list. My watch list has gold, NASDAQ, US 30, oil, AUD, USD. If you want to trade crypto, you got Ethereum, Bitcoin. We can move down. We can go into the stock market. We can trade Apple. We can trade Amazon. There's not just, like, you can be selective. Okay, guys? So see how it came back up? But look, it was an impulse. No blue. So those blue buyers got caught buying on impulse, and look at what the market does. It brings it back down. Okay, so I would be watching to see if there's more orders filled in this zone down in here, but you can see that those no blue candle closed above. Do you understand what I mean, guys? That those are what we call confirmations. Otherwise, if you're just buying hoping that it will continue to go up. Okay, trading is not hoping and praying. That's not a strategy. It's a strategy that most traders use, but it's not good over time. Okay. But guys, that exceeded my time on this call. I gotta go. My kids are really bored. It's March break. I gotta go entertain them. We're gonna go bowling. We went to the arcades yesterday. I'm gonna take them bowling tomorrow. We're gonna go to the movies. But guys, we're back tomorrow. Okay, early morning New York session. Join us. Okay. I won't be teaching as much tomorrow. We'll be more in trading tomorrow, okay? We'll be looking at more securities for trading. So tomorrow morning, guys, join us, 7 a.m. Eastern. We're going to do some analysis. We'll watch COMEX. We'll watch if there's any U.S. high-impact news, and we'll go through Wall Street together. Tomorrow, we'll do gold, NASDAQ, and US 30, and we'll get ready. And then I'll have a mindset webinar posted on the website for you guys on setting realistic expectations. Guys, thank you everyone that joined today. Learn something new. I appreciate you guys. I appreciate the people that want to learn more than someone that just wants a buy and sell signal. I appreciate the people that want to learn. This is where my passion is. My passion is in teaching. My passion is not in just, are we buying or are we selling? I don't really get passionate about that. I'm passionate about if you're learning this, because I know you can change your life with this, okay? And guys, leave us a like, subscribe to the channel. Oh man, we're 20 away from 94,000. Maybe tomorrow we'll get there. But guys, just continue watching. If this black volume sells below here, it can still go down. Why? Because now our 15-minute candle is bearish. You can go look at your hourly. Hourly is still bearish, okay? So you see the hourly volume came up, lower high, lower high, lower high, could still technically push down. If you look at your daily candle today, it's very bearish, okay? Just because there was a little move off the bottom, that's fine. That could be exhausted now, and now bigger offers are coming in and ready to push gold back down, okay? That's why if you're buying against every single time frame right now. You're buying against the daily, you're probably buying against the 4-hour, you're buying against the hourly, you're probably buying against the 15-minute, and you see the 5 minutes. You can buy, like we saw, you can buy. There is good moves of 50, 100, 200 pips, but you got to understand, you need closure. You need to have, like right now, you see now how a big blue candle is being produced again, right in the zone. So let's see now, can this blue candle engulf this black one, close above here? Then you'll get that next move. What you can do is with that big black candle, just cut it in half right there, right? And there it is with those bodies, and see if one candle, blue candle, can close above half, then it will use its friend, the next candle. That's what you call a piercing line pattern, where the second bar will engulf that big black one, and then maybe you'll get that move going up. But if it just comes up and gets a lower high, again, it's getting pushed down. Okay, remember, you need the buyers to prove to you that they're strong. Not just because you see a blue candle and you get excited and we buy, that's fine. But you got to know that you're just buying early, and that candle still has 3 more minutes to go. It's still got a higher time frame, and you could be buying right into offers and they're pushing you back down. Like any one of these candles you bought and you didn't pip and dip, they're bringing it down. So Now it's coming more into the zone. This is more where we get that double bottom produced. Here, there's your big neckline. Now we're inside here. So what I like to see is engulfing bars, at least close above that red line, maybe above, maybe if it takes 2 blue bars to close above there, then if it closes, you change that red zone to green, and then you might get that launch pad to build off of it and fill those wicks and get back up to there. But you see right there, guys, see where I cut it in half, body, data point, and you see the wick? It's exactly right there, and they're dropping it down, okay? Guys, you have to really learn this. Please go over this call later tonight, or just watch price action and let the candle prove to you whether you're gonna buy or sell. Don't just go in because you see a blue candle you buy or you see a black candle. That's not trading, okay? Trading is with confirmations at specific areas and waiting for the volume to prove to you, to confirm to you that that party is strong, either the buyers or the sellers. Not just guess every time where you're buying and selling, because I can probably save you a lot of time and effort, tell you that you're probably going to get either in drawdown or stopped out. And if you over leverage, you're going to panic, and then your next trade is going to be revenge trading. Believe me, I know the cycle. I know the process. I've been through this cycle for years and years and years myself. I know how it is. So wait, okay? Just because it's a double bottom does not guarantee that that's a buy, right? The volume, I got to continue to watch, okay? The buyers are still there, sellers are still there, but the day is in a trend selling. So it could just continue pushing down, right? Maybe it needs to come down to right here. Okay, this is a bigger bottom than this structure right here. This bottom right here was produced off the lowest point of the day. So if we look at the bigger picture where it came down there, let's consider this whole red zone to be one top. And yes, there's one bottom and two bottom, but we're not getting that second bottom here. So what if the sellers are still strong and then they push it right down there? That's where, if it comes down to 45.35 down in here, that's where I know it could be protecting the lowest point of the day. And then these buyers earlier today at 9 a.m. could be, then they're the strong double buyers. And then we come back up, right? So there's multi-levels in trading, okay? But if this one can't hold, I look for this one. If this one can't, I look for the bigger one. And the bigger one is where I place more emphasis. And that's where I trade with either I adjust my lot sizing, right? Okay, so you see it came up where? Right up to 50%. The sellers are there and they rejected it back down. Now we open black, so now the sellers are still in control. That's a lower high, lower high. Now we got a black candle, could break and continue to go. If this black candle closes below here, then this neutral zone is going to turn red and then we might continue to push down further. And the daily candle is continuing to sell. Why no sells? You're welcome to sell. I'm not telling you to not sell. I'm just showing you we had a buy alert there and I was waiting for the volume to come up to continue to buy. Why no sells? I didn't say to sell. If you want to sell, sell. But to sell, I would wait for black volume to close below here or produce a new low. Because if you're just selling, again, it could just come right back up. And if you want to get rid of this whole section right here, then you're in a consolidated phase. This was our green zone, still holding green, right? There's our red zone, okay? See how it didn't produce another lower low? It's holding. So, and then this, inside all of this, is where you let the market accumulate. Let it accumulate. If you don't feel comfortable trading this, don't trade this. Our second bottom is still intact, okay? But we got to wait for that leg to close above here, maybe catch that pullback, then drive, okay? And if it's not there, I'm not buying. If you want to sell, go ahead and sell. You're selling with the selling pressure, right? But you're selling into, well, I'm showing you a second bottom being formed right here. So you have to be calculated with your sell as well. Selling was at the top point. Remember the red box. Or if you want to continue selling, wait for black volume to close below there, flip that red, then you can continue selling down, okay? Patience, okay? Guys, that's it for me. Have a great day today. And shout outs to you guys trading with Dave in the Zoom and everyone on Discord. Continue doing what you guys are doing and get some rest tonight. Tomorrow morning, we'll be live New York, 7 a.m. Eastern for early Friday, okay? And I had a great session today. I hope you guys learned something. Practice it. Guys, write in your journal, about your trades. Every trade tells you something about yourself, okay? Well, you'll learn from every single trade you take, whether they're profitable trades, they're losing trades, they're break-evens. A trade has a story. Every trade has a story, and you got to learn that story. Otherwise, you're not going to know what you're doing, okay? So far, it's still building. Again, look at higher low in the green zone. Green zone indicates pending buy orders. Now we got a big bullish candle. Finally, we got a new high. But again, can we engulf? Can we close above pullbacks? See now? So to those who are asking me to sell, if you sold, you're in drawdown. Why? Because you're selling the lowest points in a green zone. Please, guys, learn. Don't just ask for buy and sell signals, because do you not want to learn how to trade? Isn't that more valuable than just asking someone to buy or sell? Learn. I never asked one person in my entire life to buy or sell. I learned how to trade. Believe me, you'll have a better life learning how to trade than just asking someone. Because what if this person is not here who's telling you to buy or sell anymore? They're gone, okay? Then what are you going to do? Please learn. Learning is knowledge. Look at that. That's a nice big blue engulfing candle coming out of the green zone. There's now an illustration of the second bottom being produced. And now we might have closing bullish volume. And you're going to flip that red zone green, cut that bar in half. If this one is a big engulfing bar, cut it in half. And maybe a pullback would be in there and then driving up. Guys, okay? I'll let you guys do the rest, okay? And you see, there was the second bottom. So to the sellers, learn your lesson, not to sell the second bottom. To the buyers, you got to wait for it to produce. Because if you bought in early there or there, you suffered a little bit of drawdown. So this could be your concluding candle, closing above. I would definitely cut that in half if it closes like this. Flip that red zone green and maybe buy pullbacks off of that, because that's a substantial candle coming in. And that could take us back up to that red zone and hopefully maybe break through there. Okay, have fun today, guys, and okay, so I'll do it quickly for you guys. There's the closure, confirm close above, red to green, automatic. I'm like a robot, okay? Can I cut that candle in half? Absolutely. That's a structural candle that closed above, engulfed. Grab my Fibonacci tool, opening price, closing price, cut in half. Look at the halfway point is right below the green zone. And if I wanted to get another point of control, like I've got a lot of green here, but there it is, okay? So that red line, alert, I can wait for a pullback to come in there, okay? Notice how it did not come in. Low wick, pop, and driving. Now, will it fill that big wick to the left and continue to drive, okay? There's no pullback as of yet, okay? So you got to wait for it to pull back, then drive, unless you're buying the continuation off of this. So to those sellers, I ask you, why were you guys selling at a second bottom? Your psychology should be a buying second bottoms, okay? Unless the black volume closes below and you flip that green zone red, then you continue selling. Please learn, guys, okay? Have a good day, everyone. And these are big body candles. Like, honestly, the range of that candle is 250 pips. And with this one, it's above 300. Like, the pips are ridiculous these days. I remember scalping 5-minute candle for 15, 20 pips and I was excited. Now a 5-minute candle is 100, 200 pips. I don't know what's going on with all this volume, but I love it as a trader and a scalper. I hope it doesn't go away because you can make daily goals in one candle. It's unbelievable, guys. Have a good day, or else I'm going to sit here and talk all day with you guys. Enjoy your day today. Thank you, guys. Please like and subscribe. Oh, man. Oh, 5 more subscribers, please. Get us to that 94K. That will make me so happy today. Thank you, guys. Have a good day, everyone. Have a good day, everyone. Thank you, guys, on Zoom. Thank you, guys. Rob, excellent day. Great day trading. Hopefully, you guys learned something today. I hope I reached 1 trade out. Massive explosion coming out of the second bottom. The second bottom traditionally has more volume. There it is. Have a good day.
Recording stopped.
Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell it, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.